Right. Good afternoon, everybody. This is Sherry. I'm your host for today's Traders Exclusive webinar, and we are talking about which trading strategies are working right now. We have Ed Carter, Anka Metcalf, Ray Burchett, and Kevin Dixon joining us today. And before we get started, I need to share the customary disclaimer. And you should absolutely carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And so today, first off, for today, second off, I guess, after the disclaimer, for today, please take some notes and write your questions down, but hold your questions until after each presenter is finished. You might want to include a little bit of context with your questions so that we can figure out at which point you were looking for information. And each presenter is going to leave time for questions as well as letting you know how to get in touch with them. And I'm going to introduce our first speaker is Ed Carter of Trading Tools LLC. And let's see, can you hear me? Just a second. Ed, would you please unmute yourself? Then and just let us know that you're there. He's going to talk to us about the use of technology to improve trading process efficiency and effectiveness. He's an architect of live trading alerts, the architect of live trading alerts, real-time scanning and alerting software. He's been trading for 25 years and coaching fellow traders for over a decade. Ed is a technical swing trader of both stocks and options. His focus is on trend, support, resistance, price action, and discipline in his trading. He's long been known as the Scan Man. Ed's expertise is the use of computers to improve trading efficiency and effectiveness. And in addition to LTA, Ed also designed the Trader Vision 2020 trade planning and journaling software. He's a Marine and a graduate of the Ohio State University. Now I'm going to make Ed our presenter. I'd like for you to know that this webinar is being recorded and we will post it at tradersexclusive.com. And I'm going to bring him up now. Ed, can you hear me? And can I hear you?
Yes, I hear you. Is everybody, yes, show my screen.
Ed, are you there?
There we go. Yes.
Yes,
I'm here.
I can't hear you though.
I don't know.
I can see your screen.
It says I'm not muted.
You're speaking, but for some reason we're not hearing you. Can anyone hear it, Ed? Oh, I can't hear him. Okay, go for it. Everybody's saying that they can hear you.
Okay. Well, thank you, Sherry. And thank you to Traders Exclusive for the invitation. Of course, thank all of you for lending me part of your afternoon. I hope you'll forgive me if it comes a little bit fast at you today. Just remember, I'm not trying to teach you everything about trading soup to nuts. We're just trying to give you a few nuggets, a few tools to take home and put in your toolbox. So please forgive if there's a little bit of drinking from the fire hose. With that said, let's go ahead and get started. Just like Sherry's disclaimer, I'm not going to read this to you. The bottom line is that nothing I say is a trade recommendation. And like everyone else, we all have to be responsible for our own trading decisions. So with that said, let's talk about what I'm going to cover here. I'm going to give you a quick overview of my trading style just as a context for the two trade setups I'm going to cover. And then we'll talk about my two favorite trade setups. And quite frankly, they're the only two that I use. And how I find them and how I trade them. And I'm hoping that those will give you a few nuggets to take away with you. So with that said, let's talk about my trading style. What I've found over the last 25 years is that there's nobody out to get me. So when I lose money, when I have a bad trade, it's invariably my fault. I have done something because I got too emotional, I got too distracted, or something. I have chased a trade on the fear of missing out. I've been scared out too early by watching every tick, some sort of mistake of that sort. So I try to make my trading as emotionless as possible, very systematic, very focused on the process, and extremely rule-based. I'm not here for excitement. This is a job. And so I'm looking to work the process just as I would if I was working in a factory, punching in. There are rules and procedures that must be followed, and I'm just looking to consistently be productive and make my goals. So it all starts with goals, and I'll be giving you a free spreadsheet today that will help you on that. We'll spend a little bit of time on it just because I think it's, from my coaching of traders, I found that it's something that tends to be missing. Very few traders come at this from what I think is the correct angle of knowing what the parameters are that should manage each trade. What is the goal I need to make in this trade? Everything beyond that's gravy. How much do I need to limit my losses to? Those sorts of things. And then I'm just looking for consistent base hits. I'm not swinging for the fences. I'm not trying to duplicate the sort of results you get from emails. There will be very few 1,000% winners. This is looking to consistently make money and turn this into a profitable living. That's what I'm all about. To do that, I focus on hard rules. I've got 25 rules that I keep printed out in front of me. We're certainly not going to cover them today, but I think you should have your rules, and they should be hard, and that should be something that you trade by. Something to keep control of your own emotions, make sure things don't get away from you. As Sherry said, I'm a trend follower. I also trade price action, so I'm looking to respect support and resistance. I am a swing trader. I'm not looking to day trade because I don't really want to be focused on charts all day. So that looking at that swing trade that lasts 2 days to 2 weeks, and typically my trades run about 5 days. Looking at that sort of a level is going to give me what I'm looking for and allow me to control myself. So let's talk about goal setting. And Sherry, if you would please send out that link to the audience where they can download this spreadsheet and play with it themselves. But let me just talk about this a little bit. This is a quick and dirty tool that I put together. All you have to focus on are these yellow boxes. I didn't know what level of traders or what size accounts we'd be talking about, so I just built this on a $25,000 account, making the assumption that you'd be working 50 weeks a year. If you want to take more time off than that, then reduce that to some smaller number. I also use 20% as an annual goal. That's a good number that I put out there for new traders that I take on as a coach. That's the first place you should be headed. I believe in walking up the spiral staircase. So as we achieve 20%, we'll raise that goal and shoot for higher goals, but we want to keep them attainable so that they're realistic, and keep working our way towards them. On position sizing, 4% is the maximum I'll ever use. Typically, I run between 3 and 4%, but for the ease of math, I chose 4% for today's example. The last 4 yellow cells here, those are the levers that you really have to play with to control your performance. And I urge you to go through that spreadsheet and spend some time here playing with different numbers in these cells. And you'll find out that you don't need those home runs. You don't need the 1,000% trades. Just by being consistent. I do 12 trades a month. That's 3 trades a week. I only need to win 60% of my trades. Now, typically, I I run 65 to 75%. Let's call it 70. I'm at 68% for the year, but that's right in the range I'm working at. So I'll be conservative and say 60%. I need to keep my winners at an average of 10% and my losers at an average of 5%. Again, you'll notice the 2-to-1 ratio there. This spreadsheet will then tell you, well, look, we only need to make $5,000 for the year to make these parameters work. And that's $416 a month, about $100 a week. And if we're doing 3 trades a week, we only need to clear $33 to stay on plan. And then the tan boxes here tell you the parameters that you need to use to manage your trades. With this setup, with that account size and that percent precision size, we've got a $1,000 trade, and we're looking for keeping our losses at $50 or so. We're looking at keeping our winners $100 or more. And if we do that, then working from the bottom up, that actually comes out to a 23% gain for the year if we do that consistently. And we were able to exceed our goals by 2.5%. And it's time to repeat the process, increasing our annual goal and walking up that spiral staircase. So again, if this is a little bit much, please just play with the yellow boxes and look at what that really means in dollars and cents. It gives you parameters which you can then use to manage your trading. I found that invaluable for myself, and I think you will as well. When I talk about trading rules, as I said, I have 25 of them, but let's just look at a couple of them. I trade with the trend, as I said. I'll use the 17 EMA as the measure of that trend. There's nothing magic about the 17. Use the 8, use the 34, use the 50, use whatever you're comfortable with. But I just use an EMA because it makes it very easy to measure trend. I use 2 rules related to support and resistance. I want to buy near above and sell near below. Again, whether I'm going long or short, they're just in a different order. But those are the rules that I want to follow. I don't want to chase. So for example, I won't buy if a ticker is up 6%, or if I've had three or more bullish candles, I won't go long. Same thing's true on the downside. If we've had a 6% loss or a 3+ candle down streak, it's time for me to wait before I'm entering. Otherwise, I'm chasing. And of course, then I'm looking for a 2-to-1 reward risk. At a minimum, more is better, obviously, but those are just some examples. Again, I'm a trend follower. That's because I don't believe you can consistently pick a top or a bottom, whether we're talking short-term or long-term. You might do it once in a while, but you're not going to be able to do it consistently. I've never seen anybody that could. All I'm looking to do is follow with the trend and take my cut, my slice out of that middle of the trend. And I might do it several times within a trend, but I'm looking at it one swing at a time. And because I'm following moving averages, it's very definitive. I know if price is above the average, we're trending up. If price is below, we're trending down. And I can only go with the trend. And obviously then that lends itself to some rules and mechanization. Again, I want to leverage the computer to be as efficient as I can, take as many decisions off of my plate as is possible. Swing trading, why swing trading as opposed to day trading? What it comes down to is I don't want to be watching every tick. When I get focused in, you get that tunnel vision, you get narrowed down and you can't see the forest for the trees. I want to take a broader stance. I don't want to be watching every tick. So I go with a swing trade, which gives me a little bit bigger moves. I don't have to be as exact, getting in early and getting out at the absolute last moment. There is time for me to focus on the plan, which means setting stops, setting targets, knowing exactly what price will give me my goals. Those are all important things to me, and so I swing trade as opposed to day trade. So now let's get to what you're here to hear about, the two setups. They are both very similar. They are both variations of the zigzag 1, 2, 3. Sometimes it's called ABC, but it is that most common pattern that shows you how price moves on any chart. And here's an image of it. You see the run up, you see a pullback, support held, and the bulls step in again. And this is the kind of area where I'm looking to get into that trade. What am I looking for in this setup? Well, a strong trend is underway, and we'll talk about how I define a strong trend. Then a small pullback, just a little profit taking. And again, small can mean a lot of different things. We'll talk about how I define it. Support has held, that's important to me, and then the bulls are stepping back in. Again, there are a lot of setups that are very similar, but this is exactly what I'm looking for, and now I'm going to put that into rules that I can use. Here's an image of one. I can't remember exactly when I put this slide together, but it's been within the last week sometime, and we have the strong trend underway. We had a pullback. We held support, and I did not draw this line after the fact. This line was on my chart. All of my charts tend to be marked up from a long time ago as a support. It just happened to hold perfectly, gave us something that looks like a Morningstar signal, and I was alerted when we hit the highs of the day and the highs of 2 days actually. So I know that I can get a close stop below that support. I know that I've got plenty of reward risk because my target is going to be up here before the next resistance level. And that's what I'm looking for. LTA is bringing it to me, or live trading alerts is bringing it to me, so I don't have to go through these. I know that each chart I look at is going to be pretty close, and then I can just pick between them as to which I like. So let's talk about how we define that setup exactly. As I said, I'm using the 17 EMA, but there's nothing magic about that. But I'm using the 17 EMA rising. It's rising now, and it has been rising for the last 2 weeks. Because I'm a swing trader, that's what I use. Of course, you can downsize this. You could be looking at 1-minute candles instead of daily for that matter. It is a little bit fractal here, but I like the 17 on a daily chart, and I look for it rising now and up for the last 2 weeks. There's probably a million ways to define a small pullback. The way I do it is to look at a 3/8 trap. That's basically price has pulled back below the 3 exponential and is still above the 8 exponential. That's how I define a small pullback. That works in all sorts of different charts, and I don't have to define exact percentage moves, so forth. So what do I define as support? Here I'm using the 8 exponential, sometimes known as the T line or trigger line, to act as support. I'm also using a volatility-based indicator for setting my stop, and that tends to show me support and resistance as well. And that's the Volatility Stop, or V-stop. Basically, this is an ATR-based indicator, and I use 10 candle ATR and 1.5 times that. So what that means is if a price has moved 1.5 times its average move against the trend today, I want to be out. And that's how I use it. We'll show you how that can identify some support or resistance as well here in a moment. And finally, I want to be alerted when the bulls are stepping in, and that gives me an alert at the highs. This is what LTA looks like, and specifically the setups to find these small pullbacks in a trend. I tend to trade the S&P 500 or the CBOE's top 400 tickers based on options volume. One of those two tends to be my universe. Then I've got those first 3 scans are all defining a strong trend is underway and has been underway for the last 2 weeks. That's what we have there. A white candle is just showing me that the bulls have stepped in. And then that bull V stop just means that price is above the volatility stop and it's still close below. So price has not extended. I can get a nice tight stop. I tend to use 4% for that amount. So my stops are typically 4% or right in that range. Sometimes less, very seldom, in fact, never more, but right in that range. Out of the S&P 500, when I put this slide together, there were 41 tickers that met that setup criteria, but that doesn't mean I would be alerted to all 41. That means that there are 41 potential, and now I decide, when do I want to be alerted to these setups? Well, I want to be alerted when we reach a new high on the daily chart. In fact, it has to be the high of 2 daily candles. And again, that would work on any level you're looking at. So this is what that looks like with the indicators on the chart. Note this level here where all the green dots, which is the volatility stop, they're all at the same level in a nice horizontal line. That means there's strong support right in that area. You'll also see here that I've got a nice tight stop right below the current candle, and my target is clear up here. But you can see that we're in that 3-8 trap between the 3 EMA of highs and the 8 EMA of close. That's the black line and the pink line. And then the 17 is strongly trending. When I work through that spreadsheet, my goals say I need to keep my position less than 8 grand. I'm looking to make about 900 bucks on average. I want to try to keep my losses to 400 or less. As I said, I use 60% as my win-loss ratio, although I tend to average in the 65 to 75% area, and I just do that to be conservative. My stop here, in this case, was based on that volatility stop and based on being just below this support level, and that's going to give me about a 2.3% stop. The target up here just before the next resistance level, that's about 7.5, 7.6% above. That gives me a nice more than 2 to 1, which is all I'm looking for. And I've also looked at what level would I be able to achieve my goal of putting 900 bucks in the bank. Now, I'm not going to go through the options. I'm certainly not here to teach you how to trade options today, but I tend to trade directionals. In this case, 5 contracts at a price of 280. Gave me a $1,400 risk. And you say, well, wait, you could put $8,000 into the position. Well, I didn't need to. My job is to take as little risk as possible while achieving my goals. So in this case, using a theoretical price model, if I sold this at the stop in the next 2 weeks, the theoretical model says I'm going to lose about 400 bucks. And that keeps it right in line with the loss that I can take. However, if I am able to sell in the next couple of weeks up at my target, I'm going to put about 1,200 bucks into my pocket. Now, those theoretical models aren't exact, but they'll get you right in the ballpark. So that's what I'm going to use. And what happens if I don't make it all the way? I don't get stopped out. I don't make it all the way to the target. Price stalls out here someplace just above the previous high. Well, according to the theoretical model, I'll make a couple bucks per share with 5 contracts. That means I'm going to put 1,000 bucks profit in the bank, which is more than my goal for the trade. And if I hit that level quickly, I can sell 3 of those contracts, still have my money in the bank, and have 2 more riding out to see if I can't make it to that target. I don't have to sell the whole position here. I just need to book my goal as soon as I can and keep managing my risk by moving my stop. That's it. That's how I trade this particular setup. So I use live trading alerts to bring it to me. I evaluate the chart, set up my plan, and enter the trade. Let's move on to that second setup. And you'll note, again, it's a very similar picture. I've got a trend underway, I've got a strong run up, but instead of a pullback, I'm getting a tight consolidation right at a support level, and then the bulls are stepping in. That's what I'm looking to trade. Again, I'm looking for that strong trend. I'm looking for what I consider to be tight consolidation. So it's just rest. It's not even profit taking. It's just a rest there at that level midway in the run. Support is held, and I'm looking for the bulls to be stepping in. This is what it looks like. This one was Accenture. Again, this has been within the last week, but I don't remember. It might have been this weekend that I put this chart together. I really don't remember. But you can see we've got that strong trend underway. We've got a price level where we've got 4 or 5 touches here. So there's a nice support level, and we've got a tight consolidation. So let's talk about how I define those things. Again, I'm using the same metric. I want that 17 EMA rising, and it has to be rising now and has been rising for at least 2 weeks. I'm looking for a tight consolidation, and I define that to be at least 4 candles. And I like to use a nice box. It makes for a very easy trade setup. You put your stop below the box, you put your entry at the top of the box. Very simple to plan. And I define that to be a high-low range over those 4 candles of 4% or less. Personally, I like 3%, and that's the value that I tend to use. For the box is 3%. If I can get it tighter, I'll use tighter, but 3% usually gives me plenty of candidates. In terms of support, again, I want that V-stop close below, and by definition, I've got that box that defines the lows of that box as a support level. And again, the bulls need to be stepping in, so I'm going to be buying at an alert on the highs. This is how I set it up. We're looking here at the S&P 500 again. Again, I've got a couple scans here related to the 17 EMA trending. I've got what we can call a pop out of the box. Again, it's just a tight consolidation, and that's what I'm looking for, a 3% range. And again, that volatility stop is no more than 4% below. At the time I threw this together, there were 92 tickers out of the S&P's 500's, 504 that passed that scan. And there were, the criteria that I'm using to be alerted on is not only a new high on a daily candle, but it has to be the high of the last 4 candles. So that's what I'm looking for. This is what it looks like on the chart. This one also happens to be a 3-8 trap type. It's between the 3 and the 8, but you can see that tight box here, in fact, for several candles. And this one isn't ready. I would not be alerted until we break the top of the box. When that did alert, I looked at the November 225 calls, and at that point, it was a 2.2% stop and just under 5% as a target. Sorry about that. I got other notes here popping in. But if I was to take a 4 contract position here, we're looking at $6,000 total risk. So that's less than my $8,000. That's good. If I got stopped out in the next 2 weeks, the theoretical model tells me it's about $400, $500 of risk. That's just a touch high, but acceptable. And the profit potential on this is up in the $2,900 level. And so that's even better. But what happens if we don't get stopped out and we don't make that target level? Well, if we make it up to where that second pink arrow is there, we can make about $370 per share, which is well more than my goal. In fact, if we make it to that level, I'm going to sell 3 of the contracts right away. At that level, I'm going to put my goal in the bank, and then I can let the rest ride. Okay, so the goal is to continue to minimize risk, continue to put that profit in the bank, that goal in the bank as soon as I can, and just rinse and repeat. Continue to work the process. Okay, at this point, before we get into some live examples and do your questions, I think I want to go ahead and give you a little cookie, give you the reward for sitting through the slides. I know the slides are the most boring part. So what is live trading alerts? It's a scanning and alerting tool. I think I've shown you that. And it is set up to find exactly the trade setup you want at exactly the time you want to find them. Because of Traders Exclusive, we're offering a 14-day free trial. And beyond that, I'll also offer to personally help you get set up and started if you come to our live support room any day after you download the free trial. I'll be happy to get you set up. So with that said, Sherry, if you wouldn't mind sharing that link with the audience so they can get that free trial, I'd appreciate it. And that will put the slides and the offer out of the way. And now we'll get some live examples as well as answering your questions. There we go. So let's see what the market's been doing since I've been yapping away. This is typically how I trade. I've got the two live trading alerts windows here. Let's look at, and well, Dix was one of them before. Let's look at that small pullback in a trend. See if we can't get some examples. Annaly Capital Management here. We can see the strong trend underway. We can see the pullback. It's no longer, you'll notice this is an orange light. That means it's not a recent alert. So it's been a while since this one alerted, but at the time it alerted, it was above the previous candle's high. And if you want to see that with the indicators on the chart, that's what it looks like. We've got a nice set of horizontal dots below it. That means I've got a support level in there. You could also see that if we drew support off of these highs and these lows, we got support in here someplace pretty close below. We could have gotten a very nice entry here with about a 2% stop, and you know we can certainly get that. Whenever I made this line way back when, that's what it was looking like in terms of resistance. I might do something like this, someplace right in that area. Let's see what Cummins looks like. Okay, Cummins is a beautiful example here. Strong bullish trend, nice little pullback here, just a little bit of profit taking. The bulls have stepped in. We've got a bullish engulfing here. We've got the 3-8 trap in place. And at the point it was alerting, it was at the high of yesterday's candle as well. So it was just about to break out of the 3-8 trap. And so that would have been an awesome entry to take. Oh, let's see if I can find anything else. Let's see what that eye clear is. ICLR. Okay, a little bit more of a pullback. We are still in the 3-8 trap. We've got horizontal support here just below. I'll bet there's something out here. Maybe not. But that's the level that is going to provide support here across these candles. And that would have been one to look at. CGNX. Here's another one. It's pretty close, but not quite a bullish engulf. We had a nice little pullback here, and we are just now breaking out of it. It's just a little bit farther gone than it should be, but that would have been a nice entry, breaking out, looking for a next run up, next swing up in this trend. Okay, let's wait and see if we have any more of these come up. By the way, I have expanded my universe for this presentation. Typically, I use the S&P 500 or the CBOE Top 400 just to get some more hits for today. I've gone to all US tickers, so get a few more hits. Looks like that Accenture is alerting again. Back in here is where it would have alerted me as it broke out of that box. Let's make this a little bit bigger so you can see. In fact, let's go to a naked chart that it's a little easier to see. There's that tight box. And on this candle, as we broke out of it, we would have alerted, and it's continuing to run. Let's see what Visa's up to. Same deal. There's your box, the last 4 candles, and we've broken out. Nice strong candle today. Still tradable. It would have been nice to catch it earlier, but and we probably did, but yeah, it's been alerting for a while today.
Hi,
But,
Ed.
Yes.
I have a question that I think you might want to cover like right now. James was asking, can you reiterate the 2 candle high price logic again, please?
Sure. So what I'm looking for here, I don't need to go through all of the scans that I've defined, but we've got that trade that's running up. And then I'm looking for the bulls to showing me that they're stepping in. And how do I define that? Well, it has to be the new high of the current candle, but I also want a little bit more than that. So I need it to be the high of not only the current daily candle, but also of 2. If I wanted to increase that, I could, or I could, reduce it if I only needed the daily candle. But because it's possible to have a little gap down and be at the high of the current daily candle and still be below yesterday's price, I prefer to make it so that it's not only the high of the day, but also the high of 2 days when it's alerting me. And that's for this small pullback in a trend. That's what I'm looking for there, just to show me. Again, this has, let's see when it was alerted. That alerted about 20 minutes ago or so. And so at that point in time, it would have been above yesterday's high. That's what I'm looking for. Pullback, but the bulls are actually stepping in. Okay, so that's the idea on the pullback. It's the same pattern that you see always: run up, pull back, run up, pull back, or you might see, let's see what MasterCard's doing. We got run up and then a consolidation sideways. Again, that other pattern is just looking for it to give me at least 4 days. It could be, 10 days, but at least 4 days of a tight consolidation, a tight box in there. And when we break out of the top above the previous 4 candles high, and on this one, I'm using 4 candles as my high instead of 2, because I'm breaking out of a consolidation, not breaking out of a pullback. Yeah, so in this case, I'm using 4 as my level, new high of 4 daily candles. And this would alert me to MasterCard being a potential setup. In this case, again, you've got to have your rules. I'm looking for a 70 delta. I'm looking for at least 60 days out. And so options are not going to be great there. I would probably go out to January and look at the January 315s. I get a 70 delta. I get almost 500 in open interest. I might even go up to the 310s and get 1800 in open interest with a 74 delta. So that would, excuse me, that would work for me. So that's the kind of way I would trade it. I'm looking for that tight consolidation in a trend. I think we can all see the trend here that's underway. You can see the tight consolidation and you can see the breakout there. That's what I'm looking to trade. In my case, I'm looking to trade it because this is a pretty expensive stock. I'm going to use options to be a little more cash efficient. And I'm looking for a 70 delta to give me a high win percentage, a high probability of being in the money at the expiration, even though I'm not going to hold it to the expiration. And I'm looking for plenty of open interest. That's really the gist of it. Let's see if we can't find some more examples here for us. Excuse me. In fact, let me take a drink.
And Ed, you've got a couple of people asking if this is a scanning tool. Is this scanning tool part of TC 2000?
No, it's not. It's completely standalone. LTA is built from the ground up, works on its own. In fact, let's just open the main app. We have our own data feeds from the markets, including Canada. And what it does is two functions. It is looking to scan to identify the exact setups that you're trying to trade. And then it answers the question, when do I want to be alerted to them? And our real-time alerting will give you alerts within, I believe it's less than 200 milliseconds of when the trade crosses the exchange. So this is completely standalone. It works with Thinkorswim. We have integrated, in fact, you don't need any charting package if you just like to watch the numbers flip by. But if you want to link it to charts, you can link it currently to TC2000, Thinkorswim, or TradingView. And once that's set up, anytime you click on either an alert or a scan result, it will open up that chart in your charting package. So here's 842 tickers that pass this particular scan, or if we let it complete here, it'll tell us some number that pass all 5 scans there. I guess there's 131 of them. And those are these here. Clicking on those will open up the chart for you in your charting package. So not tied to TC2000 per se, but I have it linked to TC2000 so that I can see the results on my charts. Hope that answers your question. Okay, I'll open it up for any other questions that you have. If not, we'll just make sure that you have that link again to give you that 14-day free trial. I'm not expecting you to be overwhelmed with this right here today. I want to show you what it's like and let you work with it yourself, and you make your own decisions then after a couple weeks.
Can you see any questions? I think I linked a couple of them to you, but you may have already answered. You answered the question about the TC2000. Someone did ask, Henry asked, after the 2 highs, where would you enter? I'm not really, that was about 5 minutes ago.
Right. Henry, could you just tell me what ticker we were looking at?
And I'm going to wait for Henry to write that out. Frank asks, how do you set your stop on an option trade?
It's always based on the underlying, Frank. If you have a good brokerage, in fact, every brokerage that I'm aware of has some way for you to set an order based on the underlying. You can set it based on the option price, but I prefer to set it on the underlying. So my order basically says, when I put in my entry, I put it in as a bundle. If the entry triggers, that also triggers the stop order, which is based on if the underlying goes to XYZ price, sell the option. That's what it does.
Okay, awesome. Henry says his question was in regards to your example.
Okay, so let's see, it was probably Weyerhaeuser.
This is the
yeah,
right
it was.
one?
Yeah, it was probably Weyerhaeuser, and I'm looking for to be the high of 2 candles. So it would have started alerting me when we reached the high here. So we're in the 3-8 trap. It would start alerting me at the high above this black candle, and I would have entered anywhere in here. In fact, I would have started my entry as soon as it alerted. Again, depending on whether or not I'm watching the market and trying to trade. So there is some, you have to be paying attention, or just come back another time. You don't have to take every trade to be profitable. And so I would just have gotten in here, preferably right in this area, and just looking for that trend to resume. So that's where I would enter. My stop would be just below these green dots. And my targets were defined, it was probably, yeah, it was out here. So my target was defined up here around 31 bucks.
Awesome. I need to tell you that Malcolm says I've been using the LTA scanner for 3 months and it has radically changed my trading profits, as I almost never take a position that hasn't been filtered out for exactly what I want, and Ed provides superior support for everyone.
Well, thank you, Malcolm. I appreciate it. I certainly try. That's my goal, and I'm glad that it works for you. I know that there's a lot of happy campers, and I'm certainly am one of them. That's why we build it. Is it's a tool that I use every single day.
So we've got a few other questions, and we've got about 2 minutes left, 3 minutes left. Alex says, why set an alert and not a pending order on this price?
Why set an alert?
Why set an alert
Because
and not a pending order?
You certainly could. If you decide, I know that tomorrow, if you know on this day that the next day is going to be the day that we break above, go ahead and set your order right here. Set your order right above the high of that black candle. But I don't need to do that. I'll wait for it to actually happen, and it will alert me exactly when it happens. And so I can trade then. Otherwise, I'm spending all of my time putting in these orders that may very well never trigger. In fact, most of the time won't trigger. If I would have set that alert on this day, it wouldn't have triggered the next day. And so now I need to put it in again. And I'm certainly not going to be putting in an order that's good forever. It's going to have to be, an order for the day. So I would spend all my time putting in orders that didn't trigger. That's why I'm using alerts.
Excellent. Oh man, thank you. You've got a ton of questions. Everybody, if I didn't get to your question, please send them directly to Ed. Ed, would you like to tell them how to get in touch with you?
Yeah, please feel free to reach out. It's ed@livetradingalerts.com. Please feel free to reach out. You can also go to the livetradingalerts.com website, and we have a contact form where you can contact me that way as well.
Perfect.
Okay. Thank you
so
very much, guys. And again, thank you, Sherry.
Thank you. Have a wonderful day. I appreciate you being here with us. Now, let's see. I'm going to go back to my sharing. I'm going to show my screen. Take back my presenter. How was that for everybody? I want to remind everyone that the recording is going to be available at tradersexclusive.com, and it's /archived_webinars, where you can get traders education, educational webinars, archived trader education webinars. Our next guest is Anka Metcalf of tradeoutloud.com, and she's going to be telling us about the title is Generated Income Trading the New York trading session open hours and done. I may not have said that right. Anka, can you fix that for me when I'm going to turn it over to you in just a second? Anka is the founder of TradeOutLoud.com. She's a professional trader with 20 plus years experience, futures, day, and swing trader, respected technical analyst known for her accuracy in determining market conditions in one of the most sought after and is one of the most sought after teacher and mentors in the industry. So I appreciate you coming and being with us, and I'm going to give you the floor.
Hi, everyone.
And there
Thank you
you
for having
are.
me.
Hey there. There we go. Now you should be able to open your screen and show us some good stuff.
All right. Okay. Just, it has been a while since I have used this type of room. Okay, let's see. All right, this is good. This should be good. You guys should be seeing an orange screen.
I can see it. Can everybody else see it?
All right, perfect. So, Traders Exclusive, thank you so much for having me here today with you. You guys have a fantastic lineup, and I really appreciate that you have included me in this wonderful lineup. I promised to have a very interesting conversation with you guys today, and this is how I earn my living. I actually have two styles of trading, an income style of trading, and that is my day trading, and a wealth generation style of trading, which is my swing trading and active investing. Today, we will be talking about how I generate a living trading institutional moves at the New York trading session open, only 2 hours and done, and sometimes even less than 2 hours. Before we continue, please take a second to review the risk disclaimer. And basically, what we're saying is that trading involves a high level of risk and may not be suitable for all investors because we can lose money. For those of you that do not know me, my name is Anka Metcalf, and I am the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. Every day I day trade for 2 hours the futures market, and for the rest of the day I swing trade. So basically I am hands off, I'm unchained from the computer, I go about my day, and I do have my money work for me. I have been doing this professionally for the last 17 years. And prior to coming into this industry as a retail trader, I come with 10 plus years in investment banking. I'm also the designer of an institutional proprietary trading system. And the reason why I'm the designer is because I cannot take credit for it. I just took an institutional model. It is definitely a hedge fund model, and I have adapted it for my retail trading, for my own personal account size and for the retail trader. And the system is very simple. It's based on price support resistance, but oops, there's a catch. Price support resistance, I'm looking at clusters of price support resistance. I'm looking at 8 layers of price support resistance. I'm also looking for specific trigger times, and this is only specific for day trading because the market has a certain tempo and the market offers institutional prone zones at specific times throughout the day. For instance, in the morning session, when I trade, there are 3 very important times. The first one is at 9:35, and that is after the fleecing is done. The second one is at 10 a.m. Eastern, which coincides with the first major reversal time into the market. And the third one is the prime time trigger time, 10:30. If you don't have a trade that lines up at 9:35 or even sometimes into 9:45, it's about a 10 minute range. Then you can pretty much expect the trade to set up for 10:30. And this was the case in yesterday's trading session. Today, it's set up at 10 o'clock. So the timing is always precise when you're getting the institutional moves. And how many times has it happened to you guys that you got in a trade, you had the perfect setup, and then it triggered, and then the trade fizzled out? It just stopped you out. Just 5 minutes or 10 minutes later to rotate, turn around, and go back to your initial entry often enough. And this is one of the reasons why, is because there are special trigger times in the market. This is specific to our proprietary method that I teach. And there are also specific price zones. These are institutional price zones. There are 4 distinct price zones, whether you're trading the futures market or whether you're trading the stock market. These specific price areas are prone to scale in institutions and also scale out at specific prices. There's also chart synchronicity, and what a perfect example today, if you have been watching the market, or even if you're a stock trader, do not day trade futures, you have probably noticed that there was a massive divergence that was happening between the ETFs, the major ETFs, and also the major futures indices. You have noticed that right from the moment the market opened, there was a huge influx of volatility that came into the Nasdaq futures, and also came in onto the Dow. So what happened? Nasdaq came in abruptly, and right off the open, the Dow took off, just really started to rally. So therefore, you had a really heavy divergence in the market, and pretty soon the indices started to pair out. So what do I mean by that? Well, we had on one side, we had the power setters, which were Russell and which were Russell and the Dow. And on the other side, of the weaker side, into the first 30 minutes of the day, we have the E-mini S&P, and we had Nasdaq. E-mini S&P continues to be range bound, but more so stronger was Nasdaq. But we're going to get circled back to this topic as we're getting a little bit into the presentation. Chart synchronicity and divergency is very important, because this allows me to select, and allows traders to select what to trade with precision on specific time, at these specific times throughout the day. I specialize in high velocity mode. So what that means is that I look for the areas where the institutions are legging in, and we leg into these trades at the same time with the institution. So we do not follow the institutional footprints. We are on the same pace with the institution. We're very proud to announce that Trade Out Loud was nominated by Benzinga Global FinTech Awards as for our outstanding performance. And I'm going to reveal some of the performance that we have for our day trading, because this is the topic for today. And we are nominated for outstanding performance and best financial literacy tool. This could not make us any prouder, because Trade Out Loud has been around now for exactly 10 years. If you guys want to get a hold of us, and if you want to visit our website, you could visit tradeoutloud.com, or you could visit our handle, Trade Out Loud, whether on Facebook, on Twitter, on YouTube, or LinkedIn. On Twitter, I post a lot of real-time ideas. If you guys are stock traders or futures traders, I post always ideas before they happen. And we do quite have a good following on Twitter, so you're free to follow us there if you're interested in our trading ideas. Also, very important, I love to trade from home, and who doesn't, especially during a pandemic. I mean, quarantine, seriously, I don't even know when this quarantine began or this quarantine ended, because as a day trader, we're kind of stuck in the house, especially in the morning. I kind of might miss my beach, but back in March, but we just carried along, and it was a very powerful time for us, and it was a very powerful time, especially for all the traders to make a lot of money into the market. In fact, I read an article not too long ago saying that there are huge amounts of traders that are coming into the futures market, into the day trading market, and the volume is just going to increase, because a lot of traders saw the opportunity to actually, if you do have a trading account, or even if you do not have a trading account, if you are trading a prop account, and if you want to find out more about that, you can email us at info@tradeoutloud.com, and I'll provide you with more information if you want to get started on trading futures with that. But even if you don't have a trading account, yes, you can still trade the markets. So you can definitely generate an income staying at home, but you have to know exactly what you need to do in the market in order to start generating, let's say, between $5,000 and $5,000 minimum on an average per day. And this is, again, correlated with your account size. So you have to have very realistic expectations. So I like to trade futures for a living. In fact, I do not think that this is a job. Definitely it's not a career, but it's a lifestyle from now on. So once you embrace trading, it's no going back. And especially when you start being profitable, you're going to love it. It's going to be addictive, and it's addictive in a very good way. I trade with the institutional money flow. I don't wait for institutions to show me the footprints. We trade at the same time with the institutions because we know their levels. We focus on high velocity moves for high rewards. So when I initiate a trade, I'm going to show you some of our results. I trade for those big points, and I do trade with pretty considerable reward compared to the risk allocated. I only trade from 9:30 till about 11:30, and basically it's 2 hours and done. And a lot of times we are done way before 2 hours are up. So in some days when we have a very active market in the morning, we can be done at 9:45 or even 10 o'clock. So we don't even have to wait to sit around until 12 o'clock. I focus on 4 charts on the futures majors indices, on the mini Nasdaq, mini S&P, mini Dow, mini Russell. And it's really hard to miss the trade when you're only watching 4 charts. I deploy precise strategies at specific times and at specific locations, like I mentioned before. And I apply very simplified management, because what is a trade without management? You can have a trade and you can have it run into, let's say, a target, but then it turns around, it can take you out. So I have a strict management plan in place. I'm very diligent, I'm very proactive, and I trail, so I always get my money from the effort that I made. And of course, with trading, you have unlimited income potential. The more you trade, the more you can make. So for me, it's basically part-time trading, but with full-time profits. And it allows you to do the things that you love in your life. Back in the day, which was about 20 years ago, when I started day trading, because I come from a long line of investing and swing trading. And then when I quit my job, I decided to day trade. Then I was day trading a little bit more compulsively, I would say, but I was day trading stocks. And I made the switch to the futures market about 8 years ago. And I wish I'd done it sooner, but about 8 years ago. And that was number 1, because my accountant said that it would be better for my taxes. And number 2, for simplicity. So trading is awesome. Don't be bummed out if you have a losing trade today, or if you have a losing month. If you lose money, you can make money. It's always on the other side. So when the market keeps you, this market keeps you on your toes. And in fact, this has been a very aggressive market since March. I have never, like I said, I've been in the market for over 20 years, actively participating in the market, but I have never seen a market as dynamic as the market has been in the last 4 years, and especially in the last year. So it has been a phenomenal market to make money in. Fast and furious theme, volatility, which makes you focus even more and perform better. Whenever the market is very fast, you're always going to be in your top mental shape, because you have to take very quick decisions. So trading is fun. This is my setup. I actually have 2 offices. This is my office in Boca Raton. I do have an office in Michigan. I'm in Detroit, Michigan right now, actually the upper side of Detroit, Michigan. And I do have a setup here, which is very similar. I do not have the 5 screens. I have only 4 screens here. I have 5 screens in my office in Boca Raton, and this is pretty much my layout. When I'm trading, this is my command center. This is where the magic happens. So in trading, I want to make it very clear that there is no average in trading. Literally, there are no gray lines in trading. Why? Because you're either great, which means that you're making money, you're making profits, and you're making, you're making money to pay out for your bills, to set some money aside, or whatever the case may be, or you're a loser. I'm sorry to say this so blunt, but it's the way it is, because the market does not have a gray line. It does not allow mediocrity. You're either great or you just suck at trading, and then you're going to lose your money. This is actually a snapshot from earlier today that I took, and this is my watch list. So as you could very well see, these are the futures indices that I trade. I trade the Dow, the S&P, Nasdaq, and right here where my cursor is right now, is Russell. This is oil futures, and this is gold. I always like to keep oil right here on the right-hand side, that you can see it. Because oil is into direct correlation. So energy, definitely energy stocks, financial stocks are big influencers into the mini S&P. Coming from a very strong stock trading background, I do like to infuse for more clarity this kind of information into my stocks, so into my indices and into my plays. So I do have 2 active screens. That one of them has a lot of the major players in the Dow, like Boeing, Disney, Walmart, UNH, Home Depot, some financials like JP Morgan, Citi, Caterpillar, these heavy duty stocks that are components of the Dow and that are going to give me a very good idea of the directional bias of that particular index. And I also have a screen where I watch, of course, financials, and also I watch energy stocks. And when I'm saying watch, I do have them in charts. So I don't watch lists to see percentages gain. No, I want to see the structure, because that is going to give me an idea of some rotation points, of some topping areas, of some bottoming areas, potentially bottoming areas or topping areas in the futures indices. So when I'm watching, let's say Nasdaq, I'm looking for a particular relative strength in mega players such as Apple, Google, Amazon, Facebook, Nvidia, Netflix, Baba, Microsoft. These are the biggest players. Let's say PayPal, or let's say Xilinx or whatever, or QCOM. So these are the major players that I keep an eye on before I look at the synchronicity and divergency into the market. So earlier on today, I was mentioning right in my presentation slide that there was a heavy divergency in the market. So what do I mean by that heavy divergency in the market? Well, pretty much we saw that right from the open, and this is the mini Dow. Right from the open, we had a straight move up into the first 30 minutes of the day. So from 9:30 to 10 o'clock, we pretty much went straight up. Now at 10 o'clock, everybody knows that that is the first major reversal time that happens in the market. And usually what happens is at 10 o'clock, if you had an index or a stock that has been going straight up, you can expect a pullback into that particular time from 10 o'clock to about 10:30. And at 10:30, if you get a rotation, then this is probably going to be the initiation for higher. Now, this is what happened in the Dow. On the other pole, we have Nasdaq. So Nasdaq opened high, went a little bit higher, and then it went straight down. You can see it right here. It tested 200 SMA on the 15-minute. And then what happened into 10 o'clock, this bar is actually the 10 o'clock bar, right? So when you had here the 10 o'clock reversal, which was very bizarre, because you had one index where you would have expected a pullback from high to low, and here you would have expected a reversal from low to high. This is heavy divergency in the market. When signals are unclear, there's going to be a very unclear message that these indices are sending the market, because they're moving on opposite poles. So let's say here, and we actually had one trade. We had one trade that stopped out in YM this morning, and then we had 2 other trades. We had 2 other trades that were winning trade and put us back onto the winning streak for the day and for the month. And we took this rotation, we took the price higher. I'm going to show you a little bit later on, but definitely this is the idea that we took long here with the confirmation. And then we were waiting for a confirmation here. You see this little topping tail right here. This was me trying to get in there from this inside doji rotation, and then the trade failed out. We took it with a very small loss. Then we got back in again, and we got some money on it. It hit target 1, and then we reset stop and break even, and the second half of the trade trailed at break even. I also use some confluence levels on my chart, so you can see that I have support, some support lines, some resistance lines. These are not simple support resistance lines, by the way. These are confluence areas. We teach this in our class, and these are the institutional traders that we based on decisions on. So you can see here that in Nasdaq was so elevated, the price was so elevated, we didn't have any kind of institutional movement on it. So that's why it became very difficult to trade it. Only for a scalp, or algorithmic trading was at its best today. So basically, this is what I trade. I trade the 4 indices. I also look at the gold. I also look at oil that have been very volatile lately, and also trade other futures markets. So I look at the whole entire futures panel. So why do you think I trade futures? Well, I wish I had discovered futures earlier. For those of you in here that are just geared to stock trading, please listen up, because this is going to be very interesting. First of all, you can take on a short position with fees. There's no uptick rule. You have very reliable volume. You could trade major markets, like I've mentioned before, the Dow, the S&P, Nasdaq, and Russell. You could also participate in the energy market. You could trade crude oil, you could trade Brent, you could trade RBOB gasoline, you could trade heating oil, you could trade all sorts of energies like natural gas, you could trade metals like copper and platinum, palladium, and silver. Silver was so hot, gold was so incredible. And of course, you could get a plethora of moves into the futures market. It is an income producing style of method if you're day trading it, because you're in and out of the trade into the same day, and most often in 5 minutes or 15 minutes or an hour. It depends on the market activity, how long it's going to keep you in the game. Or for wealth, that is for swing trading and for investing purposes. For instance, if you're trading agricultural products like lumber has been on a tear. Also, copper has been on a tear, and there have been some agricultural players. Soybeans, with China purchasing more soybeans from the U.S. In fact, today there was some news out. Soybean oil especially was roaring to the upside. You could trade minis or micros depending on your account size, and especially in volatile market conditions. The micros are the best added value for the futures market, because they represent 1/10 of the full size contract. And when you're having volatile markets, the difference between your entry and your stop, meaning the risk, is very wide. And then you can apply micros to better position size. The beauty about using the futures, the beauty about trading the futures market, is that you do not need a scanner. So that's an added cost. A scanner is very helpful. I've used the scanner. I've been using the scanner for, I don't know, maybe more than 17 years or so. And it helps me generate swing trade ideas. But that's an added cost. That does come with the price tag, and that can be pretty expensive. I don't use any special indicators on my charts. I actually believe that everybody that's selling indicators are the only people that are making money off selling indicators of indicators are the people that are selling them. I don't care for any special indicator. In fact, they can delay your learning process, just following dots and arrows and all that kind of stuff. For tax advantages, if you don't know the advantages of trading futures, you could definitely, search that, surf for that tax advantages for futures. You're going to be blown away. You could even have special special status from the IRS. You have a lot of advantages, especially here in the U.S. You have the 60/40 rule and so on and so forth. There's no pump and dump in this market. It's safe from rumors. You do not have manipulation in this market, no downgrades or upgrades. It's always going to be a constant market. And best of all, it is a hands-on risk. What that means is a 24-hour market. So if you want to put on a trade right now, let's say, and the market, let's say it's going to close at 4 o'clock, and in this case, the futures market closes at 4:15, guess what? You don't have to exit your position. You could stay in, and you can control it even in the overnight trading session, because it trades 24 hours. But if you day trade stocks, well, you have your hands tied, especially with stocks and options. You have your hands tied. You have to wait for the next morning to open. And you could have a big surprise, whether up or down, right? So one of the reasons why many traders gravitate towards the futures market are the relatively low startup costs. So, for example, usually requires about $30,000 to open a stock day trading account, and you must maintain at least $25,000 to keep your day trading status. Because if you lose a cent, guess what? You're back to the drawing board. You can't day trade anymore. So the futures market allows you to open an account for as little as $5,000, and best of all, you do not have to maintain that margin requirement, because as long as you have sufficient cash in your account to cover the margin requirement to trade the futures index or commodity, obviously at that amount you will be trading micros, you can actually have a balance of, let's say, $700 to $800 and still trade futures. So that is a fantastic add value for the futures market. Now, for those of you that are very new to the futures market, I want to show you an example. Time versus money, and this is very important. So the advantage of trading futures. Let's say a trader wants to day trade the Qs, the ETF, the Nasdaq ETF. That is priced, let's say hypothetically right now it's trading at $280. The trader needs over $14,000 to buy 100 shares. And remember, this is exactly how much that trader can initiate the trade on. With 100 shares, he cannot go above or below. And if the price goes up 50 cents, then you would make $50 because each cent is a dollar. On the other side, if a trader wants to day trade the mini Nasdaq, which let's say hypothetically is priced at 86.91, the trader, I'm sorry, that's a typo. Let's say at 11,000 where it is right now, the trader needs about $17,000 to buy one contract. Why do you need a bigger buying power right now, a bigger margin to purchase Nasdaq? Well, it's very simple, because it's the 2020 pandemic volatility. And especially in volatile markets, we don't even need to have a pandemic, but if the volatility increases, you're going to see that the margin requirements is still going to be up. If you have traded before the 2018 market, when we had, again, the first presence of volatility in a very long time, that was the first time when volatility kicked in back in the market. The last time we had it was back on election day, and that was in 2016 in November, and then we rode this whole entire 2017 all the way into the end of January 2018 with no volatility. And then volatility kicked in, it started to shake the market a little bit, and then that is when your broker rose your margin requirement. And then into the end of the year, it grew again because we still had huge volatility influx into the market in October, November, and December. And then we had the Christmas rally. And from that Christmas rally in 2018, the market has been rallying. Guess when? So from that Christmas rally in 2018, the market has been going very, very strong till 2020 in February, when coronavirus started to dampen the market. So that's a little explanation of the market volatility. So if the price goes up about 50 points into the Nasdaq, then you will make about $1,000 because each point is $20. I'm just looking at the market right now and I'm seeing some red bars. Okay, so let me show you how this looks on charts, right? So everything is nice on paper, but how does that translate into a chart? So I'm going to give you an example from today. So I had this quick example today. So you can see today's date right here, okay? So remember we talked about the divergences that happened in the market, and Nasdaq came right back down, and it had this 15-minute rotation right here, okay? So the Qs here, 1, 2 down, rotation. This was the entry point right here, and the market was going back up. So guess what? When it reached the high of the day trading target, take your profits and run if you don't want to stay into the trade. Trade duration was about 20 minutes. So this is day trading. You're in and out. You're looking to trail very tightly as you're getting into target. So the trade was entered at 10 o'clock as a major reversal time that happened in the market, and the trade duration was about 20 minutes. And of course, with the account size, like I've mentioned here, $14,000. If you have $25,000, you would, if you want to take 100 shares to be, kind of like on the same balance with trading one contract of Nasdaq. Then it would be about 100 shares. So your profit for this entirely move right here with 100 shares is $73. Well, not so bad for 100 shares, right? And this is a pretty good setup, very solid setup that we have right now. Versus Nasdaq, and this is a futures. This is a futures contract. You could see it right here, the same date, 10:45. You could see it right here. This is when I took this. This is when I took the snapshot. So you can see that it's from today. The trade was entered at 10 o'clock Eastern time. The trade duration was 20 minutes with one contract. Buying power was about 17,000 because of the elevated volatility rate. And you can see it right here that the gain was $600 with one contract, right? So we're comparing apples to apples. So would you rather trade the stock market and with the same kind of buying power make $73 a day, or put your money at work and pretty much the same amount, use the same amount, $14,000 to $17,000, and trade futures and make $600 in 20 minutes? So this is time well spent right here. So the advantages of trading futures: number one, full size, right? For bigger accounts, this is the perfect solution. And for those of you that don't want to pay a lot of taxes and use futures as that vehicle, like I use it. Or you could trade futures micros, which are for small accounts. And you could also trade silver micros. You could also trade gold micros. You could also, there are a whole lot of other instruments that are available for the micros, so not only for the indices. So what is the biggest advantage of micros is that small accounts can participate in market moves, especially in volatile markets. It's better than vapor trading, especially if you're just starting out. It gives you a better sense of position sizing when you decide what amount you need to risk on every single trade, because the only amount that is not variable is your risk per trade. Because if you risk $500 on a trade and then the next time around you risk 200 and the next time you risk $1,000, you have no idea what the heck you're doing. You got to risk the same amount because your account is the same. You need to risk the same amount, whether you're a 1% trader, 2% trader, 3% trader, etc. You have to risk the allocated amount per trade for your account. And then you position size for that. The futures market, there's this whole misconception that, hey, I have a $20,000 account, I'm going to trade standard lots of 2 contracts. That is just plain stupid. There's no such thing as I'm using standard contracts. You have to position size. You don't understand that concept, there is no explanation. There's actually no excuse. If you're losing money, you obviously know where it's coming from. This is great for scaling in and out of trade, and it's great for swing trading. It's absolutely fantastic for swing trading. Now, let me give you a little idea of what why I love the sweet spot so much. First of all, I trade the high velocity zone, and that is the overlap of the London session with the New York trading session that comes from 9:30 to about 11:30 a.m. Eastern when the London session closes. So the stock market basically is open from 9:30 to 4 o'clock every day, right? 5 days a week. The futures market is open 24 hours a day, 6 days a week. So the stock trade, as a stock trader, if you see an opportunity in the market and if you scan, you have to wait until the market opens so you can place the place the trade. Where in the futures market, you see the setup, you take the trade. So guess what, guys? Geopolitical events do not wait for the market to open. Events just happen. Many markets that affect the U.S. markets trade outside of the U.S. market hours. I only trade 2 hours and done, and this is day trading futures for me. I profit from the most volatile parts of the day and trade only high odds trades. If the trades and the setups that I take line up, I take them only if they correspond with my criteria and they need to meet 75% and up criteria for me to take the trade. So I get in and get out fast on high momentum, and this is my income producing style of trading. Now, you're going to ask yourself, is it easy to succeed in trading, and especially in the futures market? This is a market that is totally merciless, and you have to know exactly what you're doing in the market. Yes, you can start by trial and error. It's going to probably take you longer depending on, how you learn and depending on the materials that you could get your hands onto. But hard work does not guarantee that you're going to get up there. In fact, 90% of the traders do not. Why? Because they're lacking what? How to put everything together. They learn on one part, what a strategy is. They learn on the other side position sizing. On the third side, they learn, let's say, how to apply technical analysis. They have no idea how to combine the timing and everything. So it's going to be a really hard road for them. A lot of traders keep on working, and obviously they quit because they either run out of money or they run out of patience. A well-educated trader just pushes through this. So if you have a mentor, if you have a trader that has been doing this professionally in the market with really great results, then guess what? You're going to continue and push forward. And there is such a thing as learn as you earn. And of course, you can achieve success because trading is a system. It's not only strategy, management, mindset, or experience or attention to detail and how to put everything together. No, it's a trading system. And once you understand that it's a trading system, then you're going to excel at it. So if trading was easy as taking a book from Amazon, reading it, and then becoming an expert, everybody would be a millionaire right now. But it's not that easy. Or having an indicator, wasting your time, buying an indicator, and just trying to learn how to use that indicator and trying to trade with that indicator. I think it would be torture for me. But I'm just going to give you a quick example. I don't know how many of you guys watch the show Billions, but there's this guy here, the hedge fund manager, Bobby Axelrod. Would you imagine Bobby Axelrod going on Google and Googling an indicator and say, I'm going to buy this $200 indicator. I'm going to instruct my PM to learn how to use that indicator, and we're going to use that indicator from now on. There's no such thing. Price action is king, and you need to learn how to trade the charts like any institutional trader. I like to trade futures. Why? First of all, it's an income method, and you produce money from home on any kind of market environment, pandemic, trending market, volatile market, sideways market. There's a strategy for any market out there. You can supplement your income. It has a limited income potential. It's a recession-proof and a depression-proof skill. You learn it once, and then it just gets better and better and better, just like fine wine. You have control over your time and your schedule and over your life. So can anyone make money in the futures market or in the market in general? Well, an educated trader, a mentor trader, yes, they will make money. No education is simple, no money. Just like in everyday trading, if you have the patience to wait for the setup, if you have the patience to wait for the trade to line up for you, yes, you're going to make money. You're not going to have patience to have those two elements. You're not going to make money, because an impatient trader is a totally 100% uneducated trader. You have to train to look at the market, and once you learn how to look at the market, you're going to see how ridiculous it is when you have the statement that says, oh, I don't have the patience to wait for the trade. You don't have the patience to wait for the candle to close. You don't have the patience to wait to see whether it's developing continuation or rejection. I mean, what's up with that? So no education, no money. It's very simple. And if you do not have a structured approach and the proper education to do that, it's just going to be a waste of time for you. Not everybody's suited to be a day trader. So learning how to trade is not inexpensive, and it can cost a good chunk of change, but let's think about those losses and mistakes that you have done. So let me show you the actual results from our trading room. And keep in mind that the results that I'm going to show you right now are from only 2 hours of trading. That's it, 2 hours of trading and done, and even less than that. And the results are per contract. Overall, from January 2018 until now, we generated over $109,000 trading only 2 hours a day with one contract. Yes, it is possible. I'm a professional trader and I did it. Okay, so this is January right here. Win ratio 82%. You can see it right here. 37 winning trades, 8 losing trades, 45 trades in total. Over $6,000 in profit, trading one contract per trade. One contract per trade. You can see here between 1 and 3 trades a day maximum. Month of February, 86.67 win ratio. This professional trading at its best. 26 winning trades, 4 losing trades, $10,000 over $10,000 winning trades, less than 2 hours with one contract per trade. Month of March, over 91%. A lot of traders blew their accounts. In fact, there was a report out that there were 53 hedge funds that closed their doors because of the volatility. Yep, we thrived. $26,000 trading with one contract. Win ratio for the month of April, over 70%. 16,000 trading with one contract, less than 2 hours a day, 1 to 3 trades a day. May, 81.1%, close to $10,000. June, 66% win ratio, close to $5,000. July, over 82.93%, over almost $13,000. You can see it right here, $12,845. And the month of August, these are our last trades for today. Remember, I said that I had 2 trades in YM and 1 trade in Nasdaq today. This was one lot, $250, and then we made back 50, and then we made back 280. So overall, we're up on the day today. So again, look at this month of August, guys. Only 1 loss today, but overall positive day today. So we haven't had a losing day this month. So we teach a system. We teach and trade live every day, a highly sophisticated algorithmic system that follows institutional money flow in the first 2 hours and enables us to profit on momentum moves at specific times, locations, and precise technical patterns. Our method truly overrides any news event, any artificial indicator, earnings, and even dark pools. So is trading hard to do? Well, not really. Trading is like learning how to drive. First, it could be overwhelming. Remember when you were 16 or 18, when you got in the car for the very first time to take your driver license, right? So you have to keep track of the gas, the brakes, the mirrors, so you don't crash. But once you get used to it all, you don't have to worry about it. Your only concern is how to get to your destination. Trading is the same. You have to keep track of your entry, your stop, your market conditions, and how to take profit or to stop out of the trade, capital protection. And once you get used to it all, it becomes all instinctive. So would it be helpful to have someone that can teach you all this while you're actually making money? Like literally we're spoon feeding, and I'm spoon feeding traders every single day, all the trades. And most of all, I forgot to tell you, I trail the trade live on the mic, so I'm telling them every single second what they need to do. So all you need to do is literally take your mouse. You could be literally brain dead, and you can lift your mouse, you can make money. So I teach an institutional grade trading system to trade stress-free, institutional levels, precise buy and sell zones, management and risk management, highest patterns and setups, how and where to place the stop so you don't get stopped out as often, trading psychology, and best of all, how to put the puzzle together. We have the Power Income Futures Day Trading course that is upcoming, and you'll discover how to successfully trade the 24-hour market. We teach everything that you need from A to Z. We take you from beginner trader to expert in our trading course. If you have been spinning your wheels for a long time in the market and you think that you have some market experience, this course is still for you because it's going to take you out of that rut and put you on the right track. With this course is always live. I teach the course. This course comes with 30 days live access to the trading room. You have free unlimited retakes every month because repetition is key. You get my professional platform layout. You get the risk chart so you know how to position size like an institutional trader. You get the recordings from the classes, and you have access to student-only specialty courses. The course is August 24th to 28th from 2 p.m. to 4 p.m. Eastern. It's a 5-day live course, and it comes with a special bonus. We're activating a 24-hour special bonus zone. We're actually throwing in the future swing trading course for free, which is priced at $4,995 with the purchase of the day trading course, and plus 2 extra months access to the trading room to make sure that you're going to make your money from this course as soon as possible. This is a 24-hour offer. It expires tomorrow at 2:30 p.m. Eastern. Thanks so much for having me on today. And if you have any questions, feel free to email us at info@tradeoutloud.com and visit our page, tradeoutloud.com/futures, for more information about this course.
Well, thanks, Anka. And I did have a couple of questions here for you, but I'm going to ask them to email you because I think that you probably will have to take a little bit of time to answer them. They're really good questions, though. And I'm hoping that they will email you so that they can get their answers. That was a great presentation. I appreciate you being with us very, very much. All right, now we've got Ray Burchett coming up next. And I wanted to let you know that you will get a recording notification. You can go straight to tradersexclusive.com to our /archived_. There's an underscore that you can't see in the underline there. underscore then webinars, and you'll be able to see all of the webinars we've had since June. And we've had some really great presenters up. So the next person that I want to introduce to you is Ray Burchett of trustfirst.com. And he's going to be talking to us about why intuitive function is key to trading success. Now, Ray developed his analytical ability working as a CPA for Arthur Andersen before joining the CME in 1983 and spending over 20 years trading in the S&P 500 pit. In 1997, he helped pioneer online trader development as co-founder of Local Knowledge. His trainings consistently earned five-star ratings by developing scientific understanding for how improvement and performance are best directed and supported. Since 2009, trading, financial intelligence, process improvement, engineering, military, law enforcement, business, and legal professionals have validated the effectiveness of his intuitive development training core. Ray is also the managing member of Accelerated Intelligence, which is at theotherAI.com. That's a mouthful, Ray. I appreciate you being here with us. And I'm going to now bring you in as our presenter. And I hope, there you go. Okay, there you go. You're now the presenter. Thanks so much for joining us. And I'll mute myself.
Sherry, I'm just waiting to see the show my screen. I don't see that yet. Oh, here it is. So let me see if this does the trick. There we go. That's what I needed. Thank you very much for having me. Good afternoon to everybody. And if someone can just chime in, let me know that you can see and hear me okay. Or Sherry, if you can just confirm, because I'm not getting the
chat. All right, we've got Tim saying yes, I can see and hear.
All right, and I turned on my camera so it's a little more engaging.
There you go.
And I'm just getting this squared away a bit. All right, so we're ready to go. And Sherry, thank you for that introduction. We're just going to get on with it here. So we have to keep the CFTC happy. Trading futures, options on futures, retail off-exchange foreign currency transactions involve substantial risk for loss, not suitable for all investors. Past performance not indicative of future results. So once again, I'm going to have about probably 35 minutes of content, and I want to leave as much time as I can for Q&A because what I'm talking about is not too familiar with most, just so you guys appreciate the spectrum of folks I work with. Everyone that's already been a highly successful trader that wanted to better understand the mechanics of the brain, down to people just starting out and that didn't want to develop bad habits, and then everybody in between. I've got a boatload of folks that bid on the shiny lure, which seems to be the real plague of our industry. People saying, hey, do this, you'll make a whole bunch of money really fast. Doesn't work that way. Trading's no different than any other profession. And as the prior speaker mentioned, you got to put in the time, you got to have the plan. You have to have structured instruction, guidance, and support. So what I want to do today is take a little bit different approach. I'm going to share a bit of my own story. When I came to trading in '82, I thought I was really well prepared. I had been trained. I graduated from the University of Illinois. At the time, it was the top accounting program in the nation. So you can imagine my analytical abilities when I came to trading. Plus, I'd competed as an athlete, so I love physical contact, which is a trading pit. Had no trouble rubbing my nose in it, but I really struggled, and I struggled because I didn't recognize that I really had to speed up my brain and figure out a way that I could trade at the level that I competed as an athlete. And just because you experience it in one form doesn't mean that you can transfer it to another. And what that high intuitive function is unconscious application of creativity and imagination, integrating skill, knowledge, and experience. That's the differentiator. Trading's a hyper-dynamic environment. We don't have time for conscious thought. We always have to be thinking ahead, and that's not going to happen unless we trust ourselves. So if you remember one thing from this webinar, for most of us, our knowledge of the power and construction of trust is about a thimbleful of what we need. And that's the power of my training. I turn that into bucketfuls. And that's where we get a whole lot of good stuff that really changes our projection as far as being successful as a trader. So here's a couple questions you might want to ask yourself to determine how sophisticated as a trader or as sophisticated a trader you are. Are you able to wait for the market to align with strategy? Or do you have high anxiety over getting in? When your trade executes, do you execute as intended? Do you stay into your profit target? Do you let your stops work? Do you add to winners? Are you really committed to a development path? Are you like most traders who try something for a little bit and then jump around to something else? Remember, the key to improvement is consistent application. That earns the feedback to see and fill the gaps that we have to keep understanding and improving upon to make progress. And if you keep jumping around, it's not going to happen. You know, we're making new contract highs here again in the Nasdaq and the ES, low volume, really tough trade conditions. Are you able to trade that with confidence? Earlier this year, started February 20th when all the volatility kicked in. Were you able to trade with that? Are you able to trade with new markets? You know, these are all really important questions, and they give a great indicator as to how much we trust ourselves. In other words, trust gives us the energy to wait for that market to align with strategy and the strong conviction to execute as intended. Trust keeps us committed to our plan. Trust lets us trade new highs because we understand our plan, we're prepared. Trust lets us trade volatility. Trust lets us trade new markets because we have a process that's greatly, it gives us the structure to organize our skill, knowledge, and experience to be successful no matter what we're trading. So at the end of the day, we have to understand how to build and earn trust most effectively. That's the fastest way to improve. It's the fastest way to secure outcomes desired. Again, most folks have a thimbleful of understanding for the knowledge and construction of trust, or I should say the knowledge, power, construction of trust, and we need bucketfuls. And I'm going to explain why that problem exists. But when we understand, have that scientific understanding for how we're best directing and supporting improvement and performance, there's no doubt. You know, think about where we waste our energy. It's figuring out who, what, and when to trust, starting with ourselves. You know, think about that. And when we know who, what, and when to trust, we're locked in on what's most relevant. We've got great clarity and focus. There's no distraction and conflict. Knowledge transfers, information flows. We see the future, and that gives us the patience to wait for the market to align and then execute as intended. But without trust, we're a basket case. But when we have it, when we know the truth, we're certain to stay confident in a strategy, committed to waiting for market alignment. I call that the golden rule. That's how we know we're ready to trade. We have to have all three. When that happens, all our energy is available to develop awareness for when to enter and exit the market. We're right where we want to be. We're best positioned to stay ahead of price movement. And the main contributor that makes that happen is trust. And some people think trust is following rules and completing tasks, right? That's how we build trust. Well, that's the functional part of it. I've got to go through these learning modules. I've got to complete these exercises. I have to put this amount of time in observing the market. I've got to spend time making sense of it all, putting it down in my journal. I've got to do my chart book. I've got to go and better understand Fed policy, you know, whatever it is, those are all tasks. But there's a foundational, or I should say a foundation below there that we're blind to. And that's core beliefs and key behaviors that build and earn trust most effectively that nobody talks about. And I don't have time to get into those today. I'm going to give you some tools that'll start developing those beliefs and behaviors indirectly. So you'll have some real powerful stuff to take with you. But that you can think of a learning gap that's been ignored by higher education, professional training, organizational development. I've had the good fortune of training some pretty elite intelligence and military professionals. And they're absolutely amazed that they didn't get this training or something similar to it. Nobody trains better than the military. And you could go to my otherai.com website and look at the about page, and you'll get an idea of the caliber of the people that I'm associated with. So this is unique, and it's made a huge difference because it gets to an area that's been completely ignored. And so you can think of intuitive function as high intuitive function, just organizing our accumulated skill, knowledge, and experience to place the best of who we can be at our fingertips and release it in the blink of an eye. Now, we all have this spaghetti bowl of potential. Every once in a while, it comes together, and we have those great trading days, those peak performance experiences. We can't wait to do it again, but we struggle because we don't understand what triggered it. So when we learn the intuitive development process, again, it gives us structure to organize everything, turns that spaghetti bowl of potential into a lightsaber. And then high intuitive function becomes repeatable. And we're going to go through that. But that's it in a nutshell. It's that high intuitive function that's the product of knowing how to best build and earn trust. And so again, we get hung up on following rules and completing tasks when we really need to understand the foundational behaviors that are making our character and commitment transparent. Because when we see that in ourselves, it's easy for others to see. And that's when we really have trust. What's the hallmark of a professional? Information flowing to them and through them, right? People bring us information. When we share it, people accept our good counsel. People want to collaborate with us, right? That's not happening as a professional, then, you know, we're in big trouble. As a trader, if we're not really good at getting to the information most relevant, we're not going to have that high awareness to stay ahead of price. So one of the quick tests I like to ask people is, can you easily explain how your strategy positions you at advantage over institution, high freak, fair value, and other retail traders blind to market dynamics? That's a given. If you don't understand how your strategy does that, you need to take a step back because you don't understand the battlefield. You're not going to succeed. You're not going to survive. You'll win little victories here or there, but you're going to get crushed over the long term if you don't understand who you're competing against, their strengths, their weaknesses, your strengths and weaknesses against them. So today we're going to concentrate on the battlefield between your ears. This is going to bring the greatest benefit in the shortest period of time. And it's going to make you significantly better at everything you do, not just trading, but your other professional endeavors, social, personal. Everything gets better fast when you understand this battle and how to prepare to fight it. Then you have the trust to engage on a level you can't imagine. You're going to find out how much more you're capable of, how achievable it is. So we've got to understand the conditions. The brain is the only mechanism capable of integrating the mind, heart, and gut to know who, what, when to trust, starting with ourselves. Again, if we can't get past trust, we're stuck. Does everybody get that? Again, think about where you spend the most amount of time and effort and energy, where frustration comes from, where anxiety comes from, where anger comes from. Because we don't know who, what, and when to trust, starting with ourselves. Trust determines how fast and how well the brain filters, processes, and applies information, not technology. You know, here's the problem. You see all these great advertisements. Hey, buy my technology. It's made this much money. Well, here's the thing. I don't doubt that it's made that much money. And the people that put it together understand it backwards and forwards, sideways and upside down. They have incredible trust for it. So when it gives signals, they don't hesitate. They know it so well, they're anticipating the signal coming. They have tremendous trust over years and years and years of development and application. They cannot package that trust and give it to you. You look at what the signal says, it says I should buy. And I've got all this other stuff going on side that I've got to sort out with the buy signal. Then I decide if I want to take it or not. By then it's too late. Most of the time. Same thing if it's a sell signal. Why? Because my brain is caught up trying to figure out who, what, and when to trust. When an elite professional, they've already anticipated the setup and they're on it right away, long before anybody else realizes it's time to take action. And that time span may only be a couple of seconds or a half a second. But if you spend any time trading at all, a half a second can be an eternity when the markets are volatile. So again, it's trust that determines how fast the brain works, not technology. Again, I hope everybody gets that. And here's the other huge point. Trust erodes proportionately as information and events increase. Think about it. We've got more work to do, right? More stuff to sort out. And if we don't trust, there's going to be the bigger the lag between information and events piling up and our ability to sort through them. So we just fall further behind unless brain function increases fast enough to keep up. And that's a whole other set of problems. So bottom line, the best thing we can do to improve, to get to where we want to go, not only as a trader and everything else, is to learn how to build and earn trust most effectively. And that happens through the intuitive development process. So what's keeping us from that process? Well, that's the other side of the coin when it comes to the battlefield. Not only do we have to recognize the brain is a key, and we've got to increase brain function. We do that by building and earning trust most effectively. But there's all this other stuff keeping us from it. The first is human nature. You want to take the path of least resistance. You don't want to have to stop and really analyze, break it down, think it through, make sure we've got the best path. We've taken in all the factors. We can really take intelligent risk. Man, that's a lot of work. It's a lot of time and study. That's going to take months and years. I want to start trading right away and make all the money. Human nature telling us we can control things that we can't, know things that we don't. That's the first saboteur. Does everybody get that? Human nature telling us we can control things that we can't, know things that we don't. Second saboteur, cultural messaging. And there's a boatload of it. I break this down, I get into it in deep ways in my training. All discouraging personal accountability. And you're probably thinking, well, why would cultural messaging discourage personal accountability? Well, because that's how they control us. If we believe we can get something for nothing, privilege without obligation, we're not going to check ourselves. We're not going to assess our knowledge and competency. We're not going to anticipate how prepared we are to meet an obligation. Don't have to. I'm going to get something for nothing. So that shuts down our whole side of seeing and filling gaps. That's the key to improvement. And that messaging comes at us 24/7. It's accelerated dramatically since social media was unleashed with 4G in 2009, generating thousands of unique user data points gobbled up by machine learning and AI to profile and target for financial and political gain. People have no idea how they're being manipulated day in and day out. And it's that cultural messaging that does it. It's false narratives that set the table. You're probably thinking, what's a false narrative? Well, basically about anything that comes out of the aligned media, ABC, CBS, NBC, CNN, MSNBC, NPR. I've been telling my clients for years, you know, you hear this stuff, it doesn't quite seem right, but it's close enough to be believable. And so we're unsure. It disorientates us, it confuses us, it allows us to be overwhelmed. It's all engineered, it's all by design. It sets us up to be deceived, manipulated, and exploited. It's PSYOPs 101. You know, when you hear this information coming out of the aligned media, you've got to stop and ask yourself, why is it relevant? What's the intent? What's the motive? Why is it credible? And if you believe credibility comes from a whole bunch of folks parroting the same information, using the same words, that's the first red flag. Again, PSYOPs 101, the same message, same words. And the lock is, if you're turning yourself into a pretzel to follow the logic, that tells you it's a false narrative. You want to get untwisted? Take a breath. Look 180 degrees away from whatever the story is that they're trying to tell you, and you're going to find the truth. And you do this for about 30 days, you're going to be laughing. But you'll have your independence back. You'll be way ahead of the game. So that's what we're up against. But guess what? We're not going to go against these false narratives unless we trust our own ability to assess. That trust isn't going to happen unless we hold ourselves accountable, because that's where we start seeing and filling the gaps. So we've got to get past the cultural messaging. But before we can even get past the cultural messaging, we have to get past human nature telling ourselves we can control things that we can't, know things that we don't. So that's what these tools that I'm going to give you are going to help you to do. So it all starts with understanding the difference between intuitive function and instinctive behavior. And I'm going to explain it this way. It drives me crazy when I'm listening to the play-by-play announcer, the color analyst in the booth for a football game, and they talk about a player's instincts after a great play. I'm like, no, it's not instinct, it's high intuitive function. The only thing instinctive about sport is that desire to compete and survive. the desire to compete and survive. Everything else is intuitive. In other words, we don't instinctively know how to play football or basketball or baseball or soccer or hockey or volleyball or golf or tennis or cricket or rugby. It's all highly developed skill, knowledge, and experience. So let's go back to Super Bowl 49. The Patriots are up by 4 points, less than a minute left. The Seattle Seahawks have the ball on the Patriot 3-yard line. First and goal, they're going to go in to score and win the game. First down, they give it to Marshawn Lynch. They stop him at the 1.5-yard line. Next play, Malcolm Butler, defensive back, actually corner for the Patriots, recognizes formation, knows tendency. He jumps the route. It's a pick play, gets there a split second before the receiver, makes the interception, wins the Super Bowl for the Patriots. Anybody remember that? You know, there was a couple time downs where they had a little bit of brawling while they were running out the clock. But that's high intuitive function, not instinctive behavior. High intuitive function, again, unconscious application of creativity and imagination, integrating skill, knowledge, and experience. Instinctive behavior is reactive. It keeps us safe. Intuitive function is proactive behavior, thinking ahead. As a trader, we want to be proactive, think ahead. We have to have high intuitive function. But we've got to develop the skill, knowledge, and experience that trading requires to get high intuitive function. That's not going to happen playing follow the leader. It's not going to happen just using somebody's software. It's not going to happen reading a newsletter. I mean, we can get information from that, but at the end of the day, we have to have our own process, our own structure that organizes our accumulated skill, knowledge, and experience, giving us that scientific understanding for how we're best directing and supporting into improvement and performance. And when we know that, we'll trust ourselves. We'll be thinking ahead. We'll behave proactively. So what high intuitive function does, it optimizes decision-making and execution by creating the structure that organizes our potential, our accumulated skill, knowledge, and experience, turning it into that lightsaber to optimize decision-making and execution. Think about an athlete after a great game. They're interviewed. Some common themes of the interview is, hey, you know, it's like I saw everything in slow motion. I had all the time to make the play. Does that sound familiar to everyone? Can you recall an athlete saying that after a great game? It's like I saw it in slow motion, had all the time in the world to make the play, right? Well, here's how it happened. That high intuitive function, go back to Malcolm Butler, recognizing formation tendency, jumping the route to win the Super Bowl. High intuitive function, superior awareness. In other words, he was projecting expectations tightly aligned with events as they occur. That minimized variance allowed details to be viewed in high definition, guiding precise adjustments, securing outcomes desired. That's what happens when we have that optimized decision-making, developing superior awareness. Our projections are tightly aligned with future events. We see the details in high def because we've minimized variance. We make those precise adjustments, securing outcomes desired. Think about that power as a trader. Projecting what we need for our strategy to trigger. We're ahead of it, we're ahead of it, we're ahead of it. seeing things in slow motion. Even though the market's crazy, we've got our future vision. We're fine. We've got all the time in the world. And then what peak performance does, that allows us to access, realize, and amplify our potential. And it's unlimited. And if you understand neuroplasticity, you understand how our horizon is unlimited. So the more we experience peak performance, the more we're going to increase brain function. So some people do brain games and brain exercises. You know, those work if you're already highly structured and organized. If you're already highly structured and organized. If you're not, and you start doing brain exercises or brain games, you're just going to speed up bad stuff, be that much more frustrated, and fail that faster. Think about it this way. If you take an engine that isn't in good running condition, isn't tuned up, and you put a turbocharger on it, you're just going to blow up the engine because it's not structurally sound to handle that boost of power. And so it's the same thing with the brain. If you're not squared away, if you don't have that high trust for how you're best directing and supporting improvement in performance, you start speeding it up with brain games and exercises, you're just speeding up bad stuff. You're just going to have that much bigger of a wreck that much faster. So this is why high intuitive function is so powerful. So I'm going to give you 3 tools that are really simple but incredibly powerful. I've been teaching these tools since 2009. So they've got over 11 years of validation for making a big difference in a short period of time. So the first tool helps us to become real sensitive to anxiety. And we have to know that because that's what shuts down human nature. Where does anxiety come from? Our brains human nature wants to tell us we can control things that we can't and know things that we don't. We want to stop that. We don't want to walk that plank to disaster. So as soon as we sense anxiety, we want to put hands at our waist, palms down, fingers forward, full stop. Hey, they're not getting me this time. We just took back control. We're not going to make a mess. We're going to assess, evaluate, adjust. We're going to be better targeted, better prepared. I guarantee you, you do this for a couple of days, you're going to start getting a huge smile on your face because you're going to realize how often you've been taken off balance. And now you see it coming and you can stop right away. Assess, evaluate, adjust. Don't worry, people aren't going to be looking at your hands, they're going to be looking at your smile. So this is the first tool, and I want you to focus on this tool for about 2 or 3 days until you're consistently using it. You'll be amazed at how much more efficient it makes you, keeps you effort targeted, much more sensitive for your preparedness. If you can't remember the tools, remember this one. And that physical act of putting hands at the waist, fingers forward, full stop, that interrupts the brain. It allows you to change the path that you're on. Second tool. Here's something familiar. The way we're wired, we hear something familiar. Again, hey, I know that, been there, done that. Completely missed the boat to go to that deeper place of understanding for what we believe we already know. That's how we gain advantage. Think about elite professionals. They have a very narrow scope of expertise. They hear something familiar, they ask themselves, hey, is it within my scope or not? If it is, good, I got to pay attention. They go deeper. They keep tightening up their knowledge. Greater trust, better projection of expectations. So the second tool, when you hear something familiar, 2 thumbs up to the chest. Ask yourself, is it within your scope? And if it is, 2, go deeper, get a nugget, connect a dot, crack open a door and step through. The first tool is going to get you to see and fill the gaps faster and faster, keep you on target. The second tool, going deeper for what you believe you already know, is going to start getting you ahead, seeing the gaps before they bite you. And the third tool is a journal, collegiate notebook, composition book. You know, trading's a digital world. And when we're in a digital world, the spectrum of our brain narrows because we're using fewer and fewer senses. When we're in an analog world, putting pen to paper, we're engaging a lot more senses, our brain's much more open. And that's essential for improving brain function. So I want you to get a journal. And when you start hearing these false narratives, write them down, break them down, think them through. You're away from all the noise, putting pen to paper, you're in that analog world. Unconsciously, your brain's judging your penmanship, how much room you have left on a sheet of paper. Changes everything. So these 3 tools will make a huge difference right away. But use the first tool for a couple of days. Really see and fill those gaps. And then the second tool to start getting ahead of them while you keep using the first tool. You want to use all 3 together all the time. And then really get sensitive to those false narratives, the garbage coming out of the media that's designed to disorientate, confuse, overwhelm, setting you up to be deceived, manipulated, and exploited. Great example right now is this garbage about the post office. Okay? And you put any time into unraveling that garbage, again, look 180 degrees, there's no truth to it. So 3 very powerful tools. So to close this up, and I'm going to give you something else to do. But again, when we understand the difference between intuitive function and instinctive behavior, a whole new window for development opens up. And it's the fastest way to improve, fastest way to gain that scientific understanding for how we're best directing and supporting improvement and performance. And that scientific understanding is what builds and earns trust most effectively. Again, we've got to go from a thimble of understanding for the power and construction of trust to a bucketful. Then use those tools. And I haven't even talked about 5G is increasing 4G internet speed by 100x to power the Internet of Things. Tens of thousands of additional unique user data points. Right now, they might only have, well, in 2016, Cambridge Analytica boasted 5,000 to 7,000 unique user data points for 84 million voters. That number's probably double or triple today. And when the Internet of Things starts, you know, they'll probably have 100,000 unique user data points on each of us. Machine learning and AI will go to town, harvesting that, then using it to profile and target. And we're already disorientated, confused, overwhelmed from false narratives. We're already crippled from human nature telling us we can control things that we can't, know things that we don't. The overwhelming majority of folks are not going to be able to survive in a 5G world because they're not going to be able to improve brain function to keep up with this exponential increase to information and events that's coming. So even if you're not going to go forward with trading, this is still a great opportunity to secure your professional standing, because when you learn how to develop and support high intuitive function, that's going to make you better at everything you do. All right, so there's the tools. I want you to write down my email address, rhbltrading@SBC Global. And I'll put it up here real quick. I only have about 2 minutes left. And my website is trust1st.com. So I just sent that to Sherry. Maybe she could put it up because I can't get to everyone in the question panel. I'm not seeing it. But anyway, email me if you want access to the first 7 modules of basic training. And if you email me, I will give you free access to the first 7 modules of basic training. It goes into much greater depth of those tools. I call them the mind tools. You'll get into the understanding for risks and threats to development performance. I just touched on them here. We'll get into absolute performance truths, the intuitive development process, and then modules 6 and 7 take you through a self-evaluation process to define a development baseline. So it'll take you about maybe 2 hours to work through all those modules, but you'll have a real objective understanding of where you're at, where you need to go, and how to get there. So again, RHBL trading at sbcglobal.net. The website is trust1st.com. And if you're just a business professional, not sure about trading, you can go to theotherAI.com. And again, I would encourage everyone to go there anyway and go to my About page. And you can certainly click on the store there, click on the store at Trust First. You can go in, read the reviews, see the product lineup. So Sherry, I think I'm right here at 2:15, or I've got 2 minutes for questions. So if there's any questions that you want to share.
Let me just look. And I did post your websites and your email address so that folks can take advantage of that offer that you're making there.
Thank you.
Let's see, where's my questions? I've got a couple of people who said, thank you very much, very informative. I'm glad, Tim says, I'm glad I'm working the process. Much more good comes from it than you can imagine. Noah says, Ray, thanks for your insight and trading, deeply needed and appreciated. Does anyone have any questions for Ray before he signs off? And everybody get his email address so that you can reach him if you have questions after the webinar. And I'd like everyone else to remember that we are going to be posting this on tradersexclusive.com at our archived webinars, and you'll be able to see a replay of it should you so desire. Thank you very much, Ray. That was fantastic. And that 7 modules of your training is pretty fantastic. So hope everybody takes advantage of that. So I appreciate you being here with us, and I'm going to introduce our next speaker now. And I hope you have a wonderful day, Ray.
You too, Sherry. Thank you for having me, and thank you to everyone else for trusting me with your time.
Thank you. Okay. And again, I want you guys to remember that we are, I know I just said it, but we are posting the recording. You'll get an email tomorrow. All of our presenters will probably follow up with you as well. So feel free to take them up on their offers. I want to introduce now Kevin Dixon. He is going to be our next speaker. He's with the Wizard, and he's going to talk to us about how to win big in this volatile market with this top-down momentum strategy with options trading. He began investing in 1985. He was the training team manager and licensed broker at Fidelity Investments. He's a radio and TV analyst with over 2,000 hours of screen time coaching and teaching. He has taught at trade shows throughout the United States, including Options Expo, Wise Fest, and MTI. And he's currently the host of Opening and Closing Bell at the Wizard, a trading room that's been open for over 10 years. So I'm going to let Kevin take over as our presenter.
Excellent.
And Take it away, Kevin.
Thank you very much. Good afternoon, everyone.
Thanks
My name
for
is Kevin
joining
Dixon. I
us.
appreciate your time. I know time is short as we're heading into the last hour of today's business, so let me get everything lined up so I can begin sharing my application with you and talk about this crazy market. I mean, basically, today is a great example of that. When you look at a flat marketplace and the markets are moving in spurts, in light of the coronavirus pandemic, in light of US and China not getting along, it just seems like the world is coming unglued. But as a trader, I don't really think about it like that. I'm just saying, where's the trade? Where's the opportunity? In the bullish market of the Qs and the spiders being able to reach highs is just holding up the market right now. So we got to be very careful and mastering the math of trading. Now we're working for powerful and repeatable profits. Again, I appreciate the intro. I also appreciated our prior presenters topic, because that's a very important topic to do your checkup from the neck up, make sure that your head's on straight. So again, just a quick bio about me. You've already got all the good points that Sherry shared with you. But I'm very grateful for this business. This business has brought everything in my life that's useful. I'll say that because that's the way it goes. So my core focus today is to provide a simple and repeatable step to trading. That's the core focus. I hope my sound is all right there. This will empower you to your success, and then whatever tools that you want to use to make an extra couple $100 a day, couple of $1,000 a day, 10, 15, $20,000 a week. I've had the good fortune of coaching people many steps along the way to their first $1,000 day, their first $5,000 week, $10,000 week. It just depends on what your goals are. And once you get to that, then things start moving up. You can start increasing your sizes and bring in greater income. So really, just like with anything, you need to have a plan to get in, a direction to take. So I'm going to discuss that with you. I'm also going to give you some tools. I want you to look around the GoToWebinar video window that you're looking through. Look at the top. Do you see a camera icon? Do you see a camera icon? Because I'm going to have some things that I'm going to want you to take a screenshot of. When you take a screenshot of these items, they will go right under your computer, under your pictures, and you can get access to them and print them. But I want to make sure that you get value so that you know how to take any trade and turn it into an options trade, just within a couple of simple steps. Here's some examples of, this is the tool, this is the wizard, this is part of my trading tool that I use every day. I'm always at the same place at the same time, because trading is a routine, it's the process. You'll struggle with it until you actually find something that works for you. So, you ever wondered how these top gainers became so big at the end of the day? How did traders catch those trades? Look at the gainers and losers throughout the day. You've got a list of stocks that are rolling up, huge percentages. You got a list of stocks that are rolling down by huge percentages. How do you capture those? Well, if I told you that in the first 60 minutes of the trading day, you can find these trades, would that be great information or what? I always do the opening bell. I run strategies on opening bell. I'm a swing trader. I'm an intermediate trader. I'm a day trader when I have to be. I teach strategies in the morning, on the opening bell, which are fade the gap and fill the gap. We do those every morning. Then we go into our routine of taking a look at the trade setups. And what I want to do is do just that. I want to go through and present some of my slides, and then I want to go into looking for trading setups and show you how to apply these rules I'm going to give you. Does that sound good? If you have any questions, go ahead and let me know. If there are any symbols that you would like me to review for you, go ahead and start typing those in, and I'm sure Sherry might be kind enough to capture those and forward them to me here on the panelist bot, so I can plug those in for you. But what if you could spend an hour a day setting up your entire trading day, and you knew where you were going to get in, and you knew you were going to get out, and you could find those trades that have volume spikes using momentum-based strategies? This is what it's all about. And this is a trade I took this week. JD.com. Anybody familiar with this? Well, I've traded this a lot over the years. It's been pretty good to me. And this is today's candlestick. So if you have some charts next to you, pull up JD.com. Took this screenshot a little bit earlier. This rocketed. Bought it on Monday afternoon around this time of the day. And it gapped up yesterday, and then it gapped up today, which means it opened above the previous close, and we hit 2 targets on this in less than 3 days. It's amazing. but this is exactly the type of momentum I'm talking about. So you look at the chart. Do you want to trade the stock or do you want to trade the option? So we bought the October 62.50 long call, paid $6.60 a contract. That's $660 for the investment. Closed half the position today at $11.40. Profit gain of over 78, almost 80% in 3 trading days. 3 trading days during this week. And this has been a volatile week. We're in Apple, we're in Chewy. I'll give you a list of stocks that I'm watching right now. I tend to focus on growth stocks when I'm doing long calls, long puts. If you're a dividend trader, what have you, there's a lot of different strategies that we could work you into. But you can sit there and say all day long that it's easy to see these trades after the fact. And you're right about that, sure. Anybody can go back and say, well, look what I could have done. Well, coulda, woulda, shoulda made us all millionaires, right? But with that said, how powerful would it be if you could see these moves developing? Now, this is the wizard, and don't get overwhelmed with all the busy things on the screen right now. What it comes down to is a signal. Where am I going to get into the trade? Traders have 2 things to determine: where to get in and where to get out. Where to get in with a win, or where to get in and where to get out with a win, or where to get out with a loss. So we also look to trade with a good direction, the significant direction of the trend. We're looking at key core. And then we like to take the entry and find an option chain that's appropriate. Now, this was a screenshot from May 12th. So you buy 3 June 19, 2020 puts, your monthly expiration there at $1.15. 3 contracts cost $347 out of your account. And then you sold the long puts and you realize a profit of $468.98. I mean, basically, really what you're doing is you're catching a little bit there. You're catching about $121 of profit, 35%, in just a matter of a day. These add up. I always say that everybody's in builder mode. My team of traders, we're always in builder mode because we're always looking to add more money to the account. Now, this is what it looks like in the wizard. This is our all time frames view. This is a very powerful view because I'm not going to sit there and say that trading is anything less than just getting a system down to follow. I use this as an idea generator. I've been trading for 30 years, so I know my way around a brokerage account, investing and trading, but this is trading. We're talking about trading. So every time frame here represents a different trading style. Does that make sense? If you look at it from this respect, there's a weekly, there's a daily, there's a 240-minute interval, a 120. The smaller the signal time frame, the shorter your monetary goals. But every trade here has a stop loss and a target. Are we seeing the right screen? Let me make sure everybody's seeing the right screen here. No, we're not seeing the right screen. Well, that's not helpful. No wonder. Hold on a second. Why didn't somebody say something to me? Good Lord. So really what we should be looking at is this monitor. Is that better? Wow. So anyway, that's a big mess up, huh? I almost feel like going back. I'm sorry?
Is that the right slide though? All time frames big?
Yes, ma'am. But it's just the double windows that weren't showing up too big. So, you know, whenever we're going back and we're looking at things like that, I really wanted to be able to impress upon that. But I'm going to go ahead and move forward because I do want to get some scans in and look for some trades. Some of the folks
They
that are
were
in the
still
room.
very visible. They were visible.
Oh.
Don't worry about it.
Okay. Thank you, Sherry. Appreciate that. Maybe I'm just a stickler for details, but I just wanted to make sure I presented everything to everyone correctly. Again, don't be shy if you want me to take a look at some symbols. So this is what the all-time frame view is. It explains everything. And all you do is align the trend. Trend trading is very important. The weeklies, the dailies, the 240s, the 120s, all have different entry points, all have different exit points. We have 2 target profits. When we hit a target, we advance the stop loss. This hits target 2, so your stop loss is at the first target. And that's how we take profits along the way. So if you're buying 1 contract, You either move your stop loss up or you get out entirely at the first target. If you buy more than one contract, you leg out of the trade. I'm going to show you the rules we're going to use here momentarily, but this was a trade on big lots off the 15-minute time frame, and it didn't hold very long at all to make a 6% pop. So as you can see, your June 2025 call, big lots, then you get to sell it, and then you make the profits. This is Hewlett Packard, and what I want you to notice here is how the trend can be different up top. Trends build from the bottom, but they're sustained from the top. So if we have a strong trend guiding us, the markets will move in waves. And as a trader, we can capitalize on those moves in regards to following and continuing to trade with a solid trend. Does that make sense? So let's go ahead and persist a little further here. Here's Hewlett Packard. And regardless of what the uptrend is, we're looking at a double green on the 60-minute time frame, 2 targets struck, and that's over 16% of targets. But because we're reducing our position at targets, it's not showing as 16%. This is a conservative strategy that we run. Once again, there's your June 20th $14 call in Hewlett Packard. It's sitting on 141% in P&L as it is. That's a big, big trade, Matt. Anyway, the key to trading success is 100% dependent on how well you filter. Now, most traders are going to filter with thousands of stocks, maybe listening to Jim Cramer rattle on about something. A lot of you probably have a scanning tool or something that you use to find those stocks to trade. But the best traders filter those thousands of stocks from the top down. So we will take the stocks, we'll apply the trend, we'll apply trading volume. We'll even increase our odds even further by making a volume spike happen, by adding a percentage to the volume. Over 100% volume, 110% volume. The volume on the spiders this week has been dropping off. The volume on the spiders the last 2 weeks have been dropping to 30, 40, 50% of normal average daily volume. So we're seeing a lot of volatility volume-wise leaving the market. Now, once we filtered things down, those are really the stocks you should be trading. So if we're sitting there just trying to take what you heard on the street and make a trade out of it, we're skipping a few of the steps. So we like to call the next couple of things I'm going to share with you the keep it simple process. Trade with the trend. In order to trade with the trend, you need to be able to identify what a trend is. So a trend is a series of higher highs and higher lows in an uptrend. You can use a trend line on the lower waves of the market to guide it up. Now, a downtrend is a series of lower highs and lower lows where you draw the trend line at the top of the waves. Sideways trends, we tend to want to stay away from. That's range bound. But if you are a trader that wants to sell different strategies of options, a sideways trend, you can make money in that as well with your various spread trades that you could put together. Keep it range bound like your condors. Now, there are over 12,829 stock symbols plus that we're looking at. A downtrend is red, an uptrend is green, sideways trend is yellow, and this is pretty common in industry. This is the way that we filter. And then drawing your trend line, as I just showed you, this is Apple in an uptrend. And you notice when the trend changes, you start to see a lower low happen and a lower high occur. So then the trend line starts to show you go down. Once you've learned how to accurately draw trend lines, you keep up with the market because the market trends are constantly changing. They're always moving in waves. So as we go through one wave to the next, let's talk about price. Price is a constant in the market. And we at The Wiz, we translate the open, high, and low and closing prices to mathematically determine the trend. So the algorithm that works to determine where to get in and where to get out is foundationed upon an open, high, low, close candlestick, not a Japanese candlestick, but an open, high, low, close bar. This is a shakeout noise. Shaking out noise is really important because you ever feel like sometimes you got out of that trade a little bit too soon, left some money on the table, or jumped out because it was just down that day. So when we're green, we're in an uptrend. When we're red, we're in a downtrend. It is really just that simple. So the way that we look at doing the calculations is we'll sit there and take all this data points and program them for you so that you don't have to do all this work. And those data points analyze all the market data through calculations that go to become translated into trading data that's sent to the cloud. The cloud, the Internet of Things, as was previously mentioned. And then it comes to our wizard trader with the signals. We also suggest following the surge of volume. And I'm going to give you the rules here that we're working with as soon as I can get to the point to where I'll take in some symbols for you. Ever wonder why some stocks move faster than others? The answer is simple. The only way that prices move is based purely on trading activity. So if there are more buyers than sellers, the price is going to go up. If there are more sellers than buyers, then the price is going to go down. Hey, Mater, is this Maternidad? Is this Maternidad? Asking the question, thank you for your question. You only stocks, how about futures? Thank you. My conversation today is about stocks and ETFs, but we do have futures available. I'll tell you what, I'll show you that when we go into taking a look, because I wanted to give you the rules so that you could walk out of this room and start making money. I also want to run some scans to look for trades. This is when I would normally be doing closing bell, and I got some of my group in the room, and I want to make sure if we can find a trade together that we do, because if I could give you a great trade today, would that make your day? So we'll try and see if we can make your day. So let's talk about how stock prices move. It's purely based on supply and demand, but we do have both futures and Forex feeds available within the Wiz. So it's an all market program. Check out how volume impacts the daily price surge with Apple. The red denotes low volume days. The green denotes higher than average volume days. So in 50 trading days that Apple traded above volume, its shares averaged 25.3. 20 of the 50 trading days had Apple trading above average volume. Those days, the average price movement was $4.94. Does everybody follow that okay? The other 30 trading days traded below average and only averaged $3.03. It's really simple. On those days that Apple trades above volume, it had a 63% increase in price movement above the low volume days. So volume is defined. You can create a percentage spike. You can define what your own average volume is. Volume is the cause and price is the effect. Very important to understand. And then step 3 is to time the best entry, whether it's a chart pattern or whether it's a signal. But once you've filtered through thousands of stocks, the next step is to place your trade. Proper trade execution requires the following logically sequenced events: the symbol to trade, the direction to trade, your entry price, and then you must know when you're getting out. Do you just get on the freeway without knowing where you're going? Do you ever go into the store and just walk around in circles? You're gonna have a profit target to where you know to take money, to know you know where to win. Otherwise, a winner can become a loser because we're not paying attention. I always call that trying to watch the ball leave the ballpark. Because believe me, when I was playing ball in school, I'd slug one and I'd be watching it. And if it didn't go out of the park, then I had to run around the bases. I had to run harder. So don't just assume it's going to go out of the park. Make sure that you take it. And you take that first base, you take that second, you take that third, and then you get it home. Also want to have a stop loss so that we can preserve our trading capital. Not every trade is going to work out. I take losses. I've taken a few losses here over the last few weeks because not every trade's working out. You don't get into it. You get into a trade and earnings comes through. Earnings can go for you. Earnings go against you. Let's say that this is the time the earnings go against you, where you're going to take a loss to get some of your premium back. Anybody who doesn't take losses is probably not being very straightforward with this business, which is trading. So we provide instructions on how to place the trade, and this is what it looks like. You'll get a buy price that you're going to work with, and then you just say, okay, well, here's my stop loss and here's my target. You choose which one meets your criteria. There's the sector, there's the industry, there are a lot of analytics there. And then you've got a design to get in. Well, this is where I'm going to take a moment to show you the targets. Target 1, target 2, and then your risk. So once you know what the risk is, you know how the instructions are to place the trade, you know your entry price, you know your exit price. That's really all that you need to do to get in and out of there. So let's talk about the signals and system itself, because now I'm going to take the car out for a drive. I want to get out of the slides and I want to get into live market analysis here. And I also want to be able to take your questions and view symbols that you're looking at and give you those things I just discussed with you. So let's get into my friend here, the wizard. All right, so hopefully you can see my screen. This is the Wiz, and I've got some symbols I was looking at just a little bit ago that I'm going to share with you, and we'll just look at them right now. If there's anything you want to look at, let me know. But to answer Matt Tour's question, we do have a futures feed. And our futures feed, we got primary contracts. This is our composite performance of open signals. You got flat trades, which are your new ideas. So we, in fact, do have the categories, but we call over 1,259 future symbols. I just do the primary contracts because, you know, that's really what you're going to want to know about. ETFs, stocks, I'm going to the stock feed. We also have a Forex feed. We assign everything a trend ranking system. Bright greens and things like that are going to define very bullish. Dark reds or bright reds are going to define very bearish. That's the uppest and the strongest and weakest uptrend, downtrend. But let's talk about how you could create an options trade out of this. And I'm going to give you some things I want you to take screenshots of. Everything we've discussed so far leads to this moment in time. We've had some really big trades fall into our lap, and we got involved with some of those electronic vehicles. And you know how that goes. Tesla on its way to $2,000. And we'll just discuss some of those famous household names. These are a few stocks that are on the radar. We're at the half-hour mark before the stock market closes. I have every intention of looking for some live trades with you this afternoon. I want to demonstrate this process that I like to work with, and hopefully it's something that you can take away and use on your own as far as the rules go. Now, these are some of the big name stocks that we've been following out there, and wow, there's JD.com, the one I mentioned to you. This is the trade I took on JD on the 240. The 240-minute signal is not updated because we're past the second target. So we're currently trading, we just updated this interval at 330. So 72.68 was the last trade at 230, excuse me, at 330, 230 Central, 330 Eastern. I'm on the East Coast, so that's why I'm probably quoting a little bit different from where your time zone is. But this will update showing we've struck two targets in just a couple of days. I mean, it's long from $31 up top. So, I mean, that's from November. You get into a good trend. But this is what a trend is, everyone. Look at this. A trend is strength. A trend is agreement. Bright green. There's no inconsistency here. There's no inconsistency here. There is strength here. We had a buy trade on Bloom Energy today. So this is what I want you to get ready to take a screenshot of. You ready? These are the first rules that I'm going to give you this afternoon. You can use these rules to make money. My students in the room will tell you that these rules make money every day. This is actually the third of my formulas that I'm sharing with you. This is called options trading and the 10% rule. So from where you are at home, find the field to take a screenshot there within the GoToWebinar presenter within the panel there, and take a screenshot of these. I'm going to explain them to you real quick. Now, I say I've been trading for 30 years. The first decade or two, I was an investor. I didn't start working as a market professional until 1997. So at that point, I went to Fidelity Investments, worked for the growth company mutual fund as a trader on that fund, and then went into institutional, where we handle 401ks and things like that. And I was the training manager. So basically, I taught people how to get ready for their test and to take their continued education courses. Did that mean that I knew how to trade? No. Just because you're a broker doesn't mean you know how to trade. If you're a broker, you're simply an order taker. I was a manager over a bunch of order takers, really. So then I got laid off after 9/11. Bear Stearns went away. So here's my experience. I'm unemployed. I'm a professional, investment professional, licensed, and all the brokerage houses are collapsed. Couldn't get a job. So then I started going into my account and didn't know what to do. You know, got all this money I've saved up, got these investments, but how do I trade? So I stumbled through a few things, and then I made these rules. And my rules are unbendable. I write formulas that I share in my classes, and we use them to guide ourselves into not making the mistakes that I made before I started to learn to trade, to be effective. And I'm sincere about that. You'll need rules. Otherwise, you're just going to sit there and ask yourself, what am I doing here? So the first rule is time. I found that my time was inconsistent. Now, if you strike targets quickly, you'll be considered to buy less time. But time is something you pay for. Time is something that you can sell back to the market. I'd rather have enough time than not have enough time. So the time rules will go larger. The bigger the time frame, the more time you should buy out in your options chain. We don't run out of time. If you're trading a monthly chart, 270 days, considering leaps. You're trading a weekly chart, minimum of 180 days, 120 to 180. Dailies, as long as you've got over 60 to 90 days, you should be in good shape. On 360 to 40 intervals, I require at least 60. And then on the 120s to 60-minute intervals, I generally going to do a minimum of 30 days time. That would be within the month. If you're below the 60-minute interval, then you can do 30 days minimum or consider trading weekly options. Weekly options are great. We do a lot of covered calls on weeklies. Rule number 2 is how to determine the correct strike price. This is called the 10% rule. Now let's take a look at the signal that we're working with here. Now, what is the 10% rule? Well, this is to get me close to my options chain. This is a completely life-transforming instrument that I found on my computer. It's called a calculator. Is anybody familiar with calculators? So this is a formula. This is the math. So what we're going to do is we're going to take the entry price of $17.43 and multiply it times 90% to define 10% off of that price. So that means that basically we're looking at rounding up a $16 call strike. Does that make sense? A $16 call strike should place us in the money enough to be able to make this trade. Because I don't want to be at the money. Some people want to be at the money. That's okay. You need a lot of momentum there. Not saying that Bloom Energy is not a momentum stock, because that's far from the case. It's a very big momentum angler. But you want to make sure that you do locate the correct strike price. So once we've determined which is the correct strike price, we know where we're going to get in. We know where we're going to get out. Let's just go find the right strike. So now we're going to go into taking a glance. And this is a flyer. I'll tell you what, if you're into the electric vehicle complex, which is a growth complex, there's a couple of new complexes, sectors that are emerging here. I'll share a few of them with you if I have time. That I'm tracking like a hawk, no doubt about it. So then we've got Bloom Energy. We know what strike we're looking at because we've done the math. We know where we're getting in at. At this point, it's at 1691. The trade is down, so it's not in on the day. So we have plenty of time to let this plan go into action. You choose your contract month. So that's where the time rules came into effect. This is a trade off the daily time frame. So we've got September, and then we have November expiration. We're looking for a minimum of 60 days time, and we don't have that in September expiration, so we're going to go out to November. These are your November call strikes, and these are your November call strikes that are in the money. And following along with the rules here for you, if you're going short, here's the calculation. Your sell price times 110. If you're going long, your buy price times 90%. So that's the formula that you use. Open interest. And this is a number of traders, that's bad English there, it's going to drive me up the wall later, that actually hold the contract. Now, I do have a minimum requirement. Generally, it's 300. A lot of people will say above 100 is there, but I like to have a little bit more just to decrease the spread, really, because what we're working with is making sure our transaction costs go down. After the brokers waived the commissions, the spreads went up on your options. Do you see how that happened? Bunch of mugs. Seriously, those guys. Someone used to put them in a whack-a-mole machine. All right, so delta. This is a range number. I'm always looking to enter a swing trade between 65 to 75 cents with a trend. As a trend trader, these are 4 rules to follow. 4 rules to follow. If one of the rules are not met, then none of the rules are met, as they're designed to line each other up. So now that we found the correct strike price and we've identified the correct amount of time, it comes down to taking a look. Now that is going for $4 a contract. So it's kind of expensive because this is not a cheap stock. We're going to take a look at the analytics here. This is Thinkorswim. I'm sorry, this is TD Ameritrade directly from the web platform. They've had some issues this week at Thinkorswim, but this is a system that you could use pretty easy. There's our delta right at a 74. How did we get there? Using a calculator. Can you do this? Can you do this? Of course you can. Calculator on your computer. Some people will charge you $1,000 to look at what I've just shown you and not be consistent with it. But my traders, we use these rules. We use these rules every day, and we use these rules and take it to the bank. So the rules for trading options. Now this is simple. Once you know where you're going to get in, then you design how you're going to get out. And within the Wizard, we have those rules. But I also wanted to give you an extra value. So aside from those rules, sometimes, for example, the Wizard has so many long trades there that it's coming down to, hey, Kevin, you missed that entry. You got to design an entry on your own. You know, I got into Apple a couple of weeks ago, and so I'm just sitting here trying to get this to $500. Some people got out of it today when Apple was moving very well, but I'm following the rules. Got into Chewy a few weeks ago. Got into Wayfair. But here's one I'm really trying to get back into, Square and C Limited. I've been in C Limited and I love that stock very much. C Limited is going to be, in my opinion, a $400 or $500 stock. It's a competitor over with Alibaba, etc. But this has just been a rocket ride. I mean, look at the quote here on this today. 52-week highs, 152.50. And that was yesterday, and then today we raised that bar 154.25. This stock keeps setting higher highs. So those are the type of stocks I want to be in. I want to be in a momentum trade, because a momentum trade is going to show you a really beautiful chart. It's going to look like this. You see how the markets move in waves and cycles? This is a breakout trade. So now just wait to time that next entry. So let's say that all of the signals were already strong and already long, and you couldn't find a way to get yourself into another trade. There's a buy trade down there at 151.86, but the stop loss and the target are really too tight for me. I'm a swing trader. I want to make more on it. So here's the second rule set that I'm going to give you. This is my manual trading rule set. Again, I share this with my students because I want my students to make money. Does that make sense? My students make money, they might tell 1 or 2 of their friends. But if my students lose money, they're going to tell every one of their friends, right? So this is the second formula that I'm giving you. And this is a goal setting formula. This is called the 357 rules. These are my personal trading rules that I've developed over my years of trading. I see your question there, Dave D. Ballard Power coming up. Let's take a look at the November $20 call strike. 10 minutes left to market, everybody. If there's anything you want to take a look at, let me know. So long rules are based on your entry. All my rules are based on where you get in. I have 2 levels of stop loss. This is my check engine light. Stop level 1, 3%. If the price of the stock goes through here very quickly, I may just exit the trade. But my maximum stop loss I try to work with when I'm creating my own entry is 5%. And that's the 3 and the 5. The 5 and the 7 go to work on targets, and I have 2 tiered targets. So I'll take target 1 of 5% from the entry, I'll take target 2 of 7% from the entry, and I hit these numbers very consistently. Short rules are based on the entry, and this is where you also have the calculation for that. Oh, Barry, how's it going with you? You did get a screenshot of the rules, right? Implied volatility, I just try, it depends. I like to trade some high volatility stocks sometimes because those are the growth stocks that really pop. So sometimes they have high implied volatility. Does that make sense? Has everyone made a screenshot of this that wants to get a screenshot of it? Because I'm getting to within a few minutes and I want to make sure that I don't go over on time. Okay, excellent, Barry. I'm going to go straight to Dave's question, and Dave's question is going to put us through some work here within the Wizard. He wants to take a look at Ballard Power. Yeah, and Plug Power was moving today as well. This is Bravo Lima Delta Papa. Ballard Power. We have a buy signal at $16.20. So again, using the entry rules that I gave you for options trading, 1620 times 90% long equals a $15 call strike. So you're rounding it up, and Dave has correctly looked at the $15 call. And I'm going to go ahead and reply correct to his comment. And let's go take a look at it on the options chain. Bravo Lima Delta Papa. Sorry for my days in radio. That's all I can do is sit there and think, well, maybe they can't see me. And we're going to go to October expiration here. We didn't have October. It's on a daily time frame. I'm not going to look at less time. And we are in the money. There's your $15 call strike. 844 contracts of open interest. Goes for 3 1/4. Excuse me, that's the high for the day. It goes for $3.10 a contract. You have a 15-cent spread there. And the Greeks on this are right around the sweet spot. 64 is all right to enter. I just don't want to enter too weak and have to have the stock do more. And I don't want to enter too late and have the stock have to do less because I'd be overpaying for the premium. I don't like overpaying for anything. Do you? I don't. So now again, if you want me to take a look at any symbols here, I'll be glad to do that. I hope you've enjoyed the conversation. It's a short conversation, but I did want to have a conversation because it's important that you first of all become familiar with my style. If you enjoy what I've offered to you this afternoon in education, with those 2 rule sets, they will make you money. I'm going to give you a 3rd rule set. How many of you are day traders? This is my fade the gap and fill the gap strategy. Look, I'm just giving stuff away here, huh? But the important thing is that, like I said, if you make money next time you see my name, you might say, well, I learned something from that Kevin guy. Or if you lost some money, you'll say, you know what? If I see that Kevin bum on the side of the road and there's a water puddle next to the street, I'm going to make sure he gets water splashed on him. And I would hold you to that. So this is the fade the gap, fill the gap. I go through this every morning on opening bell. Take these at face value, take a screenshot of the requirements. I don't have more time to go over them, so take a screenshot and follow them. Look at what happens. Look at the requirements for selection for both sides of the trade. Look at the setup for the trade. I define exactly how to take this trade to you. So that's what it's all about. That and making profits. So as I'm getting short on time, the question is, well, Kevin, what's the deal? I've heard what you've talked about. I either A, like what you're doing, or B, I don't like what you're doing and can't wait for somebody to come pull the hook on you. So here's what I'm doing. I'll show you. And this is an annual subscription that we're talking about here within the tool. So what we offer is the 3 essentials to success within our package here. And like I told Sherry, I'm going to stick to honor a deal that I made earlier about it. So I'll honor a specific price. The Wizard, that's what it's all about. I didn't really get to go into a lot of detail with the scans, but really, the scans can happen very quickly. I'll do a quick scan in a moment, and we'll see if we can't find anything there in the last minute. You also get this combined with the Wizard University, and that's my classes. And we also provide you with coaching. We offer several days a week. The opening bell is 5 days a week. We have a Sunday planning session from 5 to 6. I do options classes 3 days a week. Matthew does presentations a few times a week as well. He's my associate. We give you a 30-day guarantee. If you don't like what you see, get your money and flee. Your business is either earned or you take it back. So we hope that we can earn your business the old-fashioned way, which is by showing you the results. We do have an area of archived training webinars, your checklists, which are provided to you. We actually have strategy videos as well that you can review as often as you like. And we also have completed some predefined scans, so you don't even have to do anything. And this is what our website looks like. Thewizard.com is there, but I've got a different offer for you here on the day. Bonus, everybody who signs up, I'm going to give the ultimate reversible strategy to. You'll get this as part of the package. It's a manual trading strategy. You can take those rules I just gave you and turn it into an options trade. The website to get involved is www.thewizardnow.com. www.thewizardnow.com. And that'll get you started. Now, of course, bonus 2, you get access to my opening and closing bell program. That's actually a pretty fun time. I love my class. I love my students. I love my students' success. Now, this package actually was written at $14.99. I told Sherry that I would do $12.99, and then I see what the slides are for. Whoa, excuse me. But if you do want to get involved, I'll do this for $1,299. That's 1 year of the stock feed, 1 year of the ETFs feed. You can create email alerts being notified of when you're receiving any new buy signals or any new sell signals. We have options feeds in the program. We have different charting packages, sector and industry, weekly training webinars. This is really a good value. I mean, we're talking about maybe a little over $100 a month. So I know it says $14.99, but like I told Sherry, I'd honor $12.99. That's an additional markup on the value. I don't want to take anything away from the product. It is a great product, but also at the same time, my first opportunity to work with everyone here, I want to make sure that I gave everyone a great deal. So now let's go ahead and see if we can run that last scan of the day. It's like the dance floor is starting to wind down. Last scan of the day. And you should hum that to the song of Last Dance. So here's how we're going to filter this down as we head into the after hours market. We're going to take the signal that updated at 30 minutes, and we're going to run the scan. At this point, I'm taking over one symbol there, and I'm filtering it down. So 674 symbols are returned. You have a 75% win rate. You have longs, you have shorts, you have winners, you have losers. You have profits. So now apply the trend. Apply a volume spike of 150% of average volume. Define the volume on a 30-minute time frame. Say you want to see at least 10,000 shares traded. And then define the price, minimum $5. Strongest uptrend, weakest downtrend, above $5, 10,000 shares volume, spiked by 150% on the 30-minute signal. Wow. I couldn't have made this up before I sat down here because this 30-minute signal updated at 3:30. So that's how you get to the bottom line. Well, it doesn't matter what time frame you're on. The bottom line is reinforced by volume and price. There are no losses running the scan. So I know that that looks pretty good at home, but this is what we work with. Not everything is going to win. We've got a couple of longs there that are not making money, but every time frame is a different trading plan. So I'd like to wrap up my opportunity here speaking with you today to wish you the best in trading. You do not need a coupon code. There must have been a question that's coming through here. My email is kevin@thewizard.com. Kevin@thewizard.com. That is my email. So you can drop me that. You can also use my other email, which is tradedonkey@gmail.com. Either way, it gets with me. And we like to make sure that you get as much value as possible. Again, thank you very much, Sherry, for your time. Traders, Take it seriously, be safe, be blessed, wash your hands, social distance, and find successful trades. Thank you.
Thank you so much. That was fantastic. Thank you.
No, thank you. I'm grateful.
Just one last minute. Does anybody have any questions? I've got a thank you, Kevin. Great educational seminar. I learned a lot today. Thank you again from Michelle.
Wow.
And MG is asking, do you have a trial period for the Wizard?
Yes, we give you a 30-day guarantee. So that's your trial period. And we're flexible if something happens within 30 days and you need a couple more days. We don't mind things like that. I mean, like I said, if you succeed, if you do well, maybe you'll refer us to someone, but if you don't succeed, you'll let everybody know. So we want to make sure you have enough time to get acclimated to the system and to the process. So absolutely, 30 days, you don't like it, after 5 days, get your money back.
Fantastic. All right. Thank you so much for joining us, Kevin. I know that there was a lot going on in your world to get here, and I do appreciate it. I want to thank everybody else who's here on the webinar. We still have a lot of people with us. I really appreciate everybody staying to the end. Excuse the noise in the background if you can hear it. I want everyone to know that we've got another webinar coming up September 2nd. We hope you'll join us. You'll be getting emails about it. You'll be getting emails from your presenters today just so they can keep up and catch up with you, reiterate what their offers were, and we're going to have a recording available as early as tonight, but most definitely by tomorrow on tradersexclusive.com/archived_webinars. Thank you again, everybody. I hope you have a wonderful day, and I wish you that you'll be trading well. Have a wonderful day. Bye-bye.